We're showing live on YouTube, and then I'm gonna try to go back and go live on Facebook. All right, we're live on YouTube. We are live on YouTube. Let me go back and see if I can put us up live on Facebook. Nope, it won't let us do us both. We either can go one or the other. Let me see if I can share it on Facebook. Let's see if we can share it on Facebook. All right, YouTubers, I see y'all there. Let's see if we can share it on Facebook. Ah, there it is. It looks like it's gonna let us share it. So let's share it on Facebook. Looks like we can share it on Facebook. We're in luck today, y'all. We are in luck. Where's my Facebook share? Here it is right there. All right, so we're on Facebook. Let's share it to some places on Facebook. The first place we want to go to on Facebook, we want to share it on our group, RBBS. Let's go there. Let's share it there. All right. And then we can go back and then hit some of the places that we need to, we can share from there on to other places. Oh, let me try sharing it on LinkedIn too while I'm at it. Y'all give me just a moment. We're just trying to get this all straightened out so we can get it shared on LinkedIn as well. And let's share on Twitter. All right, so we are on Twitter, we are on LinkedIn, we are on Facebook. Let me get rid of some of this stuff for you all so we can have a clean broadcast today. All right, let's go over here. Let everybody in. We got a lot of people joining in today. So that's good. That's good. That's good. Victor Agard is not going to be joining us today because he is traveling. He's on a flight headed to Houston, Texas. So let's wish him some safe travels while he's out and about. And let me get back over here to see what we're doing on Facebook. Let's get this shared out. Go to the RBBS Logistics Learning Center. Let's start sharing this out so we can go ahead and get started for the day. I want to appreciate everybody joining us.
You had earn.
If you got stuff going on in the background, let's turn off your mics. All right, we are sharing live on Millionaires in the Making of Tallahassee. We're also sharing live on All Truckers United. I appreciate them. Sharing live on my alma mater, James A. Shanks, class of '83. We are sharing live on CDL Professionals, the Generational Wealth Network, Cash Flow TV, We're also sharing live on freight brokers, instructors, and trainers, owner operators, Six Figure Lifestyles, members only, the Spot. We're sharing live there. We are sharing live on Black Entrepreneurs United. We are sharing live on a whole bunch of places today. Room 21 worldwide. I'm not gonna do too much sharing because I don't want Facebook to block me for another 30 days. They say I share too much, but y'all know me. We try to push it as far as we can. All right, there we go. We'll leave it at that, and then we can go back and then we can share with the rest of the world later. All right, let's go and get started. We got everybody in. Everybody's in. So how's everybody doing today?
Doing great.
Doing good.
Yeah, blessed this morning.
Great.
Outstanding.
Great. That's what I'm talking about. So we are live. Then we're going to start my recording. Hello, everybody. Today is Saturday, and y'all know me. This is Calvin Butler. I'm here with the members of the National Dispatchers Network. Yes, I voted, in this year's election. Got my little I voted pen there. So I did my little civic duty. Hope everybody did theirs. And let me go ahead and start recording according to this computer. All right. As I said, this is Calvin Butler, and I'm here with the members of the National Dispatchers Network. And today is Saturday. Now, Saturday is usually what we call our Six Figures Booking Freight from Home show. But we're starting a new tradition. We're starting a whole different show for a whole different format. Our format today is wealth management for truckers and freight industry professionals show. That's what we are now. Okay, that's what we're gonna start doing on Saturday, because we talk about a lot of stuff, but everything that we talk about is from our third-party logistics firm that we started about 8 months ago, the Assurance USA Corporation. And our third-party logistics firm, we do something a little bit different than most third-party logistics firms. All of our products, all of our services, everything that we offer to the industry, which we call our core products, all of our core products either help owner-operators and people within the industry, shippers, dispatchers, freight brokers, owner-op business managers, third-party logistics firms, just whoever is in the industry. All of our core products are geared towards helping them to either make more money, save more money, or protect them in some type of way. Okay, so today we're going to continue on with that, and I thought it might be prudent that if we just went ahead and changed our name, it's from the Six Figures Booking Freight from Home show to Wealth Management for truckers. For truckers and industry professionals. Remember, if you have your mic open, okay, and if you're going to be making kind of like off-screen comments and things, mute your mic. Thank you. We appreciate that. Thank you. All right, so let's get started. Hope everybody's doing fine. But before we get started, I want to congratulate Miss Larissa Pompey. Yay, congratulations, Miss Marissa Pompey.
Thank you so much.
You're welcome. Marissa Pompey got promoted in our MWR Financial platform, which we offer a product. We offer a product to industry professionals and to the general public. And one of those products is wealth management, where we show people how they can get their own team of financial experts to help them to build wealth. Now, when I say your own team of financial experts, that's exactly what we mean. Your very own team of financial experts. They help people to work on their credit. They help to reduce your taxes so you can put more money in your check every week and every month. They also help you with your finances, and they help you to get on track to becoming a millionaire in a very short time. Now, when we say a millionaire, we mean a true millionaire that you can actually stroke a check for $1 million and not miss it. So those are the goals of the Making Wealth Real, which is MWR Financial. And Ms. Pompey, she's been active and She's been promoted to Senior Executive Director. So congratulations on your promotion to Senior Executive Director. And we're going to have a whole bunch of more people who are going to get promoted here really soon. All right. So congratulations to her. And let's go over and let's start. Let's go over and get into what we're going to be doing today. All right. Today, what are we doing today? All right. Today's first episode of Wealth Management for Truckers and Freight Industry Professionals. Today's episode is 401ks versus private reserve banking for company truck drivers and industry professionals. Okay. I think this is going to be a great subject. I think it's going to be a great day today because we're going to be showing you all. Well, first of all, we're going to be discussing the attributes of both of the 401k, which everyone knows what a 401k is, right? We all know what 401ks is, right?
Yes.
Right. So we all know what 401ks is. It's quote unquote supposed to be a retirement plan, retirement plan where the employee is taking control of funding their own retirement. And in most cases, the employer does what's called matching funds, either dollar for dollar or a certain percentage of the dollar that the employee is putting in. So if the employee is putting in $1 for their retirement, the company that they're working for is either matching that with another dollar, or they're putting in anywhere from 25 cents up to about 75 cents, okay? The majority of companies now don't do dollar for dollar matches. Companies used to do where you start off with, if for every dollar you put in, they used to put in $2. They don't do that anymore. Very few companies even do dollar for dollar anymore. Most companies now either do like 50 cents per every dollar you put in, 25 cents for every dollar you put in, or something like that. So that's the 401k. Now 401ks, they have some good attributes. They do. They are tied to the stock market, which means as the stock market goes up, so does your 401k. Okay? And the stock market does make gains and drops every single day. Now, on the downside of that, with a 401k, if the stock market goes down or plummets, so does your 401k. Okay? Because it is truly tied to everything that the market does. So if the market is going up, your money is going up. If the market is going down, your money is going down. So it's kind of volatile. It's kind of up and down, up and down, up and down, up and down. Now, normally, usually 401ks, because they're tied to the stock market. And the stock market, generally, the stock market. Now, there's a difference between stock market and financial markets. The stock market, right? It has a growth on average of about 65 to 68% of the time during the year. The other 35 to 37% is on its way down. So, but it has more gains than losses. That's why you always see the stock market increasingly steadily going up. So that's going to be your gain to loss ratio. Now, if the stock market takes a plummet and stays down for a long time, there is a chance you could lose all your money in your 401k. Okay, and that's not good. That's very bad. There is a chance you could lose all your money in your 401k. If the stock market takes a deep enough plummet and it stays down long enough, you could potentially lose everything you got into your 401k, and that's not good. Some of the other features of a 401k is, I think one of the drawbacks is when you pull your money out, what happens? Anybody know what happens when you pull your money out of a 401k?
You pay the taxes.
Yeah, you got to pay taxes on it. I'm saying I'm going to take that 30% off the top, y'all. Okay, that's just how it is. Uncle Sam wants his money, right? So as long as your money is in the 401k, right, it's protected. It's what's called shelter. It's a tax shelter. But the day you pull your money out of 401k, Uncle Sam he's knocking. Y'all know what I'm talking about. Hello, I want my cut. Right? So that's what happens. So That's another thing about the 401k. Another thing about the 401k, it doesn't have any liquidity. Now, what do we mean by liquidity? Can anybody tell me what we mean by liquidity? Can anybody tell me what we mean by liquidity? All right, I'll tell y'all. Liquidity is giving you the freedom to go in and pull money out of your 401k without it hurting you or without lowering the balance in your 401k. Okay, and without you having been taxed on it, because we already know when you pull money out of it, you're going to be taxed on it. When you pull it, when you cash out your 401k, you're going to be taxed on it. So 401k doesn't give you a whole lot of liquidity. That's what they mean by liquidity. You need money to expand your home, or you want to send one of your children to college or whatever. You can pull money out of your 401k, but it's going to drop your balance in your 401k, right? If you got $200,000-$300,000 in your 401k, you say, well, I need $20,000 to pay for my son's college or my daughter's college. Your balance is going to drop by $20,000 when you pull that out of the 401k, and you're also going to get another drop because you are paying taxes on that too when you pull it out. Okay, so you get hit with a double hit there. You get hit with your balance dropping, and you get hit with having to pay the taxes on it. So 401ks, they are, I would not consider them the best vehicle to structure your retirement with. Okay, but that's the general purpose of what 401ks do, how they operate. And there's a lot of trucking companies, a lot of company drivers that have 401ks, right? Let's take a look at one of those such companies. Let's go and look at Swift 401k, Swift Transportation 401k. So let's look at their 401k, and let's see here. Here it is right here. Let's look at their rating on BrightScope. Now, BrightScope is a financial monitoring type of company, and what they do is BrightScope is probably one of they're the leading rating system for investments and retirement plans and all these type of things. Okay, they are the #1 rating system for that. Now, according to BrightScope, Swift Transportation Company, right here, their transportation company, let's look at it, make sure I get it back and read it here. Swift plan description. Swift Transportation Company retirement plan is a defined contribution plan with a profit sharing component and 401k feature. This plan has a BrightScope rating of 51. Y'all remember that? BrightScope rating of 51. Swift Transportation Company retirement plan currently has over 16,900 active participants and over 198.6 million in plan assets. Now, exactly what does that mean to everybody? Okay, all right, exactly what does that mean? All right, here's what that means. Swift, y'all know they bought Knight Transportation about a decade, back in 1992, I think. I'm sorry, back in 2000, I take that back. Back in 2012, if I'm not mistaken. They bought Knight Transportation somewhere around 2012, 2014. I know this because I was driving with Covenant Transport in 2014 when it came down that Swift now had completed their purchase of Knight Transportation, okay? And that made Swift the largest trucking company in the United States with 23,000 company drivers. Yes, that's right. Swift is a monster, y'all. They are a monster. Y'all can talk about how bad their drivers drive and all that stuff you want to, but that is a monster of a trucking company, right? Right? Does everybody agree with that? They're the biggest thing going right now, right?
Yep.
Yeah.
Yes, sir.
Yeah, I mean, they're a giant in the industry, 23,000 truck drivers, that ain't no joke, man. Okay, yeah, they ain't no small, they ain't pulling no small weight. There's some heavy weight carriers, okay? 23,000 truck drivers. And out of that 23,000 company drivers that they have, 16,900 of them are on their 401k plan. Now, we talk about that $98.6 million in planned assets. Now, that sounds like a lot, right? That is how much money is total in the 401ks of all their 16,900 drivers. So let's take a closer look at that. Because y'all know me, I'm going to the numbers, I'm going to the calculator, right? That's what I'm going to, right? So you got $198 million, was that correct? In planned assets, right? 198.6. So let's make sure we got this right. And we got 16,900. So you got 198 million. So I put my right zeros in there. 198,000. That's 198 million right there, right? Yeah, 1, 2, 3, 1, 2, 3, 1, 2, 3. Yeah, 198 million divided by 16,900, right? Right?
Yep, correct.
So, what does that mean, y'all? Y'all see that? That means that the average 401k account with Swift, the average person that has a 401k account with Swift, now some are going to be higher because they've been with Swift longer. Some are going to be less because they just started with Swift. Some are going to be in the middle, right? But when you average it all out, right? That's how much money they've got in their 401k. That sound like a lot to y'all? Does that look like a lot?
Nah, that's skimpy.
Nah, that don't look like a lot, do it?
That's what, like 11,000?
$11,751.48. Yeah. All right. But see, you have to take a closer look at what your investments are doing for you, especially a retirement plan. Now, I'm not saying that everybody that has a 401k with Swift only has $11,751 in their account, because obviously some people have been with Swift 20 some odd years, right? Right.
Yeah.
So they may have upwards close to 100,000, 110, 115. You know, there may even be a few in there that's had their 401k from the beginning. They've been there almost 27, 28 years, and they may have a couple of 100,000, 200,000 or 300,000. There may be somebody that has even $500,000 in their 401k account, but I doubt it. Why? Because lately the stock market has not been doing that great over the last few years, has it not? Overall, right?
Yes, plus the
Right.
COVID-19.
Now it's doing. It's starting to do okay. Okay, with some news and some stuff that's happening around the world. You also notice how the stock market is doing. I mean, shoot, my Bitcoin stock has shot through the roof now. It's like, well, last time I checked, it was like almost $16,000. Yeah, my Bitcoin stock is doing crazy right now. So Bitcoin is doing well, and that's tied to the markets too, y'all. In case y'all didn't know, just to give y'all let me see what it's doing right now. I'll give you a more accurate. Bitcoins right now, yeah, it's doing 15,000. That's it right there, 15,300 and some odd. That's what it's doing right now, and that's a drop. Y'all see, it took a steep drop from where it was earlier this week, today. So it has taken a drop from when it started today. It dropped from the high of 15,600 down to 15,380 right now. So it's kind of moving back and forth, 380, 390. But you know, I'm showing y'all my Robinhood account. That's my Bitcoin stock. So y'all can see how that Bitcoin stuff is doing. You can see how the stock market is doing. So the stock market itself is it's volatile. It's up, it's down, it's up, it's down. Sometimes it goes down, 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 and stays down for a while. And that's where it gets bad for 401k holders. When the stock market plummets and it stays down over a long period of time, over a relatively long period of time, through stock market, time frames. If the market stay down for 3 weeks, that's a long time for stock market, age. Okay, because you can lose a lot of money in them 3 weeks, and a lot of people lose all of their 401ks. Now, in seeing this, that the average account with 401k, they have about $11,751.40 that's in there. If the market takes a real bad plunge and stays down for a few weeks, what happens to that amount of money right there, y'all?
It'll probably plummet also.
Yeah, that's gonna plummet also. So it's not difficult to see how that if you do have your money in a 401k, unless you got an awful lot of money in it, you could go broke on your retirement with your money in the 401k if the market takes a bad turn, right? Right? Now, I don't want to say that the 401k is all bad, because it's not. Okay, it's not all bad, but let's talk about the history of the 401k first of all. Let's talk about the history of the 401k. Now, a lot of you all are not old enough to remember back when the companies used to have pension plans. Okay, pension plans were what the company used to reward long-term employees that had worked for them for 20, 25, and 30 years plus. And for them helping the company to become successful and to become wealthy, the company took it upon themselves to take care of that employee in their retirement years, in their elderly years. Okay, so they get too old, they can't work anymore, and they can't, they just can't work anymore if you get to a certain age. You're not productive anymore, and you don't want to work your whole life up until the day you die. So the companies, they will reward employees that stuck with them for a long time with a pension. Okay, now that was a good plan. That was a good idea, right? Good thing, right? Everybody agree that pensions were good, right?
Yes, sir.
Exactly, pensions were good. My uncle, he retired from the city of Detroit, and he was a garbage man. Seriously, he was a garbage man, like Rock. Y'all remember Rock being a garbage man? Yeah, Rock, you see your head all the time. Yeah, he was a garbage man. Worked like 33 years with the city of Detroit. When he retired, the city of Detroit paid him $5,200, $5,200 every month up until he died. Actually, they paid it after that because his wife started getting it after that. That's a good retirement, especially back in the early 80s when he retired, like in 1979, 1980 or something like that, because he had worked for them since like 1960 something up to 1980. And then when he retired, he started getting his pension, $5,200 a month. Now that's a good retirement plan. And when he died, his wife started getting that money, and and so on and so on. And I think he had it set to where his wife got some and his children got some. So that was a good pension plan. That was a great retirement plan. Then something strange happened. Now, I talked about this on a previous broadcast, and I was mistaken in saying the years of the baby boomers, okay? But something strange happened. Between 1946, I think was, to be accurate on the baby boomers, between 1946 and 1964, or 1949 and 1964. It was a period of about 15 or 16 years, okay? 78 million people were born between that time frame. 16, 17 years, 78 million people were born. Now, that means that people who were born in 1949, they reached retirement age around what? 1995? That sound about right? 1995, 1990, somewhere around there? Does that sound about right? And people who were born in 1964, that's 1 year before I was born, so they will reach retirement age in about I'm 55, so they're 56. So that means they will reach retirement age in about 9 years, right? 65 years old, right? Does that math sound right to everybody?
Yeah, it sounds right.
All right.
That's close enough.
All right. So here's what happened. in that time frame, from that time to 1964, when all those people were born, big corporations, Coca-Cola, Procter and Gamble, the electric companies, all these big corporations, Ford, the Detroit Motor Corporation, all these huge, companies who were bedrocks, pillars of the economic community. They realized that with all these people being born, when they get to the point till they enter all these people are in the workforce now. This was around 1968 when they came up with this idea. 1970, 1971, 72, somewhere around there. When they started realizing that if they kept going with the pensions, right? If they kept going with the pensions, they were going to have to pay out a whole bunch of money when these people reach retirement age. And that was going to run them broke. Because they would have been paying out to the tune of almost $47 billion per year to pay for retirement for every year that those people are on retirement, that would be on their pensions. They couldn't do that. They would go broke. They would go bankrupt. They would be out of business. So that's what they realized. So they started, going to the federal government, the rich uncle, Uncle Sam. They started, crying to their rich uncle. Now it took some years, because they started their campaign with the federal government. They started trying to get the federal government to give them some type of relief so that they could still be able to afford to pay pensions. Now this all started with the lobbyists back in 1968, 1969, right? And over about a 10-year period, they were, trying to petition the government and using the lobbyists and all this other stuff they were doing. And finally, like around about 1980, 1979, 1980, somewhere around there, 85, somewhere in between that time frame. I'm not sure exactly when, but it was in the early 80s, shortly after my uncle got his pension. Okay, so once you got it, but they can't take it away from you. All right. But around about the mid 80s, the federal government said, look here, I've been hearing y'all crying, all my nephews, y'all crying, boo-hoo, and I know y'all y'all scared because y'all afraid y'all gonna lose all your money, gotta pay out these $40 billion a year to these people that don't work for y'all 20 and 30 years and help y'all make billions, but y'all don't wanna pay them out all that money. I understand that. I'm gonna help y'all out. I got a tax code for you, okay, that can help you out. It's called the 401k. That's right. 401k is a tax code. In case y'all, if you don't believe it, look it up. I can look it up for you right now. Okay, 401k is a tax code. But I want to make sure y'all know that I know what I'm talking about. Now I don't want y'all to think, well, Calvin, you just talking crap. No, I'm not. 401k is indeed a tax code. Let's look it up. Okay, tax code 401k. As y'all can see here, all right, 401k 26 US dot code 401k, qualified pensions, profit sharing. 401k is a tax code. All right, just so you all know that I'm on the right track. I'm not just making stuff up here. I want y'all to understand that this is all factual stuff. 401k is indeed a tax code. Okay. Its original purpose was not originally designed as a retirement plan. That's not what it was. It was strictly a tax code for wealthy corporations, big corporations, wealthy corporations, to get more breaks than anybody else on their money, on taxes, on things like that. Okay, it relieve them of certain obligations that we as regular people are obligated to do, because they were looked upon as providers of growth, stimulators of the economy. So the federal government created the 401k tax code for wealthy corporations. So with that being said, that was already in place before we started taking advantage, before we started using, I don't want to say taking advantage of, because it's really not an advantage, before we started using what we know today as a 401k. Is everybody with me so far? Does everybody understand that?
Yes.
Okay. Hopefully I'm giving
Yes.
everybody an education today. Okay. Yeah, if y'all just bear with me, I promise you, this is gonna pick up real fast, and you all gonna be saying to yourself, "Oh my God, I didn't know that." What have I been missing out on? All right. So let's continue. 401k was indeed a tax code. That's what it was meant for. That was its original purpose. But these wealthy corporations started complaining to their rich Uncle Sam, help us out. We can't pay this $40 billion a year. We're going to go broke. Help us out. So Uncle Sam said, okay, I got a tax code for you that I can help y'all out with. Under the 401k tax code provisions, we can create a scenario or a product that would allow you to approach your employees and get your employees to let you off the hook for paying their pensions and let them fund their own retirement. Does that sound like a deal?
Mm-hmm. A good deal.
Does that sound like a good deal or a bad deal? It's a good deal for the corporations, right?
Yep,
But
it
really
is.
it was a bad deal for everybody else, right? Or for the employees, right?
Yes, sir.
Yeah, of course it was a bad deal. So the corporation, well, Uncle Sam, Uncle Sam, that don't sound too good for them. They said, yeah, you're right. But it sounds great for us because if we do that, that means we can go from paying $40 billion a year to really not having to pay anything. I'm saying, so well, hold on. I know it don't sound good, okay? I know it don't sound good, but let's sweeten it up a little bit. In order to make it sound better or to make it easier to swallow as an employee, you all have got to offer some type of incentive for them relieving you of that responsibility and them taking on that responsibility on themselves, right? So all these rich nephews, they say, well, Uncle, what type of incentives do you suggest? Well, we suggest matching funds. Show them that you're willing to help them. You're willing to extend your gracious hand out, and for every dollar that they put in, you're gonna match that with $1, or you can match it with $2. Aha! Now, them nephews say, "Oh, now that might work. We like that. we really like that." So then they started this whole huge national campaign. You saw it on all the television sets, on all the radio, on all the newspapers, Wall Street Journal, Business Journal, Business News, the New York Stock Exchange, the New York Times. It was everywhere. Introducing 401k retirement plans. Take control of your own retirement. Take control of your own money. Wouldn't you like to be in control of your time after you finish working? Don't depend on your company to provide you with your retirement. Take control of your own retirement, right? When you have more control of it. Why? Because it's tied to the stock market. And back then, the stock markets were doing great, right? The stock markets were, this was back in the early 80s and 60s, and people were, so when you talk about the stock market then, people who came up in the 50s and the 40s, 50s, and 60s, they knew the stock market was a place where billionaires were being made. So it had that appeal to it. That was one of the things that made it so easy for everyday average Americans to give up their pensions. Listen to me now. To give up their pensions and started using a 401k. Sound like an okie doke to me, don't it? Does it sound like an okie doke to y'all? Somebody got the okie doke pulled on them, right?
Yeah, for sure.
Yeah, I mean, that's an okie doke all day long, right? You was paying for my pension. Now I got to pay for my own pension. And by the way, you gonna, every dollar I kick in, you gonna kick in $1. But I can't afford to kick in as many dollars as you was kicking in. So guess what? I'm not gonna, my version of retirement is not gonna be nearly as great as the version that I had before. but you done made it look so sweet till it looks like it will be, because you're saying it's tied to the markets, and if the markets go way up, yeah, I could go way up. But what happens if the market goes down? Right? I can go way down. I can lose my money. I can lose my life savings. Oh my God. But they didn't tell them about that in the advertisement. That was in the fine print. You know, when you're doing your 401k and you got all that paperwork you got to fill out, just sign here and this year, sign here. The places where you initial, because they want you to do that quick, that's where the fine print was that says that if the stock market goes down, you lose all your money. But in the front part of the big bold letters, as the stock market rises, your money rises. Y'all see how they pull the wool over our eyes? Put it over right here. You can see the bottom part, but you can see the top part. Okay. And that's what. And look, this is no secret. This is all history. You all can look this stuff up yourself. This is how it played out. And this is what we have now as a 401k. Now let's fast forward, because in the beginning it seemed like it was pretty good. You know, I put in $1, my company puts in $2. I put in another $1, my company puts in $2 more. I put in $2, my company puts in $4. I put in $4, they put in $8. I put in $8, they put in $16. Sounded great, didn't it? Right?
Mm-hmm.
Great.
Yes,
right?
sir.
Right?
Yep.
Yeah, sounds great. I don't have to put in much, but before you had to put in nothing but time. But they made it seem like you were taking control of your own retirement. And it made it seem like you had more power to make your retirement grow faster than the company was versus when it was a pension. Okay, it was an okie doke, people. That's what it was. In my opinion, I'm gonna let y'all make your own decision. Okie doke. I call it an okie doke. You can call it whatever you want to, but
It sure was. It sure was.
I mean, it looks like a duck, quacks like a duck is a duck. Right? So that's what happened. That is what the 401k was and is now. That's how the 401k came about. It was never meant to be a retirement plan. It was a tax code provision for wealthy corporations. And they wrote it in underneath that, and then they created the retirement plan based on the tax code. Woo. We got played.
That's dirty. I just think that's dirty. It's dirty.
Hey, what do we always say? Either you learn to play the game, or what?
I guess so, but yeah.
The game will play you.
Or you get played by the game. Look. And y'all know I'm telling the truth.
Yes.
Y'all know it. Y'all remember what pensions were back then. You probably know some people who got pensions way back then. And it was great gravy, man. Gravy. I was working a garbage man. His pension was $5,200 a month. Come on, man. $5,200 a month back then was like $9,000 a month now. Now that was a retirement plan. Now, so everything seemed to be trucking along good. No pun intended. No trucking companies, they started buying into the 401k plan. Yeah, let's get out people these 401ks. You know, swiftly, showing people these 401ks. We're going to match you dollar for dollar and all this type of stuff. This is that. And it sounds great, sounds good. Let's roll with it. 16,900 truckers will swift opted in to the okie doke. That's what they did. And they're not the only ones. There are people over at Schneider. There are people over, I can pull up trucking company after trucking company, and you will have thousands upon thousands of truck drivers who have opted in to a 401k plan. Right? Now, question is there something better? How many of y'all out there think that there's something better?
I don't think so.
MWR.
Something better than a 401k?
MWR Financial.
MWR Financial.
MWR Financial. And what's so great about MWR Financial is they offer you the private reserve account. Okay? Now, we're going to show you how a private reserve account stacks up to a 401k. And we're also going to tell you why some of you, well, pretty much all of you all have never heard of a private reserve account, even though private reserve accounts have been around for longer than 401ks. Y'all didn't know that, did you? Private reserve accounts have been around since banking was created. But hence the name, private reserve banking, which means not only is it private, it is reserved for wealthy people and not for everybody else. Look here. Now, let me show y'all what I mean. In case y'all think, well, Calvin, you just making stuff up. No, I'm not. I don't make this stuff up, y'all. I'm going to show you what I mean. Somebody asked a question on one of my YouTube videos the other day, and I had to answer him about private reserve accounts. I'm gonna take you to that channel, and I'm gonna take you to that question. Let's see here. What was he at? Hold on. Oh yeah, here we go. Let's go over here. Let's go to this YouTube channel right here. All right. Let me do this. First of all, let me start sharing my sound. Where's my sound? Where's my sound? Oh, here we go. Let me share my computer sound. All right. I was giving a little live YouTube on private reserve accounts and stuff, and telling people how the 401k works and stuff. And this gentleman chimed in, and of course, you're always going to have some people who are, that have these, they're skeptical. Okay, this is fine. I don't mind skepticism. I like skepticism because it gives me a chance to educate people. When people call up or they come in on your stuff, and they mean it to be a negative comment or a negative critique. But I like those. Because that gives me a real opportunity to educate. And not just educate them, but educate the people who are watching that conversation. Okay? So this gentleman comes on when everyone else is saying, now here's all other stuff that everybody else was saying. Brutal. I'm finally ready to get wealthy like you. Need to get in touch. Well, I called him back and we got in touch, whatever. Someone says, he's coming and saying, I'm getting in. Here's someone else says, which banks have these options and how much to start an account? And then this gentleman comes in. What is this? Some kind of scam? because he don't understand it. Okay. And that's normal. I can understand that. Because it's something that you haven't been taught. What I'm about to discuss with you all right now, private reserve banking, what I'm about to share with you all, wealthy people do not want you to know. Well, most wealthy people don't want you to know. And most wealthy banking institutions don't want you to know it. How do I know they don't want you to know it? Because they don't present it to you. They don't even give you the option when you go open up your banking account. But every bank has private reserve banking. Every last one of them have private reserve banking. But 90% of their banking clientele never even get to hear about it. Now, I wonder why that is. Well, let's take a look at how the world is made up. Only 10% of the world's population is wealthy. You all agree with that, right?
Yes.
Right? And only 1% is independently wealthy. You all agree with that, right?
Yep.
Right. So where is the other 90%? The other
paycheck to paycheck.
90%, where are they at? They're not wealthy. They're middle class, minimum wage, lower class, and poverty. That's where they are. That's the 90%. So if you have a product that's private and it's reserve banking, it's private banking, are you going to offer it to the 90% that's not wealthy?
No.
No. You only want to offer that to the people who are wealthy because you want them to keep getting wealthier. Look, y'all, I'm going to wake some people up today. When I finish here today, a lot of you are going to be saying, well, what the hell am I holding on to my 401k for? I need to go to my bank and get a private reserve account. Well, hold on there, Johnny Be Good too fast. Let me show you why that may not be possible for you at your bank. But I'm going to show you how every bank has this already, but they're not discussing it with you. All right? So this gentleman comes on because he don't know anything about a private reserve account. So it sounds too good to be true. It does. When I tell you about how this private reserve account works, all of you are going to say to yourself, well, my God, that's a great product. How come I don't know about that? How come I don't have that? It sounds too good to be true, but it's true. Wealthy people have been doing this for decades and decades and decades, ever since banking began. All right, so this gentleman goes on to say, what is this, some kind of scam? So you and your family make money off of each person that joins? No, that's not what this is. Private reserve banking has been around long before I came along. Private reserve banking has been around since before I was born. Private reserve banking has been around since the beginning of banking itself, right? So my response to him is this. And like I said, I'm always trying to educate people. You might want to do some research on private reserve banking. If you Google it, the private reserve strategy, it says this. The private reserve strategy is designed to help develop or improve one's financial position by helping them to avoid or minimize unnecessary wealth transfers where possible, and accumulate an increasing pool of capital that provides accessibility. I mean, we talked about that accessibility thing in the liquidity, accessibility, control, and uninterrupted compounding. I want y'all to pay attention to that. Uninterrupting compounding. Now remember that phrase. Remember that phrase. Uninterrupted compounding. Okay? Wealthy people have been using these strategies for decades. Now, this is me talking now. I just read him what Google said about it. July 25th, 2017, that was published in Google. All right, now this is me talking to him. Wealthy people have been using these strategies for decades. Traditionally, these types of accounts have only been available to individuals with a minimum of $250,000 in their accounts. Some have been known, some banks, some financial institutions have been known to require as much as $1 million in a financial institution to take advantage of a private reserve account. Until now. All right? Let me go on and finish with you all. We are the first, MWR Financial, okay? We're talking about MWR Financial. We are the first to make this type of banking available to everyday Americans. There is no need to participate in the business opportunity offered by MWR Financial to reap the enormous benefits of a private reserve and banking and land banking. Now, this is my thing to him. I hope you take an opportunity to research this wealth building strategy that has been available to the wealthy for decades. Whether you take advantage of it or not, those of us who are taking advantage of it will continue to accumulate wealth. Good luck to you, okay? Then I went ahead and posted from a bank, from Bankrate. Now we all know who Bankrate is, right? Bankrate.com, right? Don't we all know who Bankrate.com is, right?
No, not me.
Bankrate.com, they are the leading advisor on what things to invest your money in, how things work, how they're rated, from IRAs to money markets to regular bank accounts to business accounts to private reserve accounts to everything that has to do with banking. That's what Bankrate.com is. Okay. So this is not coming from me, little old me who don't know nothing. Okay, this coming from an industry-leading firm that knows everything there is to know about banking. All right, and to prove it to you, let me go over to it so I can get it straight from the horse's mouth. We're on bankrates.com's website, right? Private banking. Here's how it works. All right. Now, this is how it has worked traditionally. I want y'all to understand something here. Okay. All right. So let's go through this. Let me put it down so I can put my blind eyes on it, because y'all know I'm half blind. All right. At Bankrate, we strive to help you make smarter financial decisions while we adhere to a strict editorial integrity. This post may contain references to products from our partners. Here's an explanation of how we make money. All right. It's nice to have a go-to person in life. Private banks cater to the banking and financial needs of wealthy individuals or individuals with high net worth. Private banks and wealth management firms usually give clients a main representative and may also use a team approach. Y'all starting to realize?
I just seen another talk up the street. I thought it was you. I was like, and they didn't even stop. I said, the other one did that.
Somebody, whoa. Please mute your mic. If you're having a conversation on top of my conversation, that ain't gonna work. All right. So you're talking. I'm talking to the person who's just having a conversation with somebody. Mute your mic. Thank you. All right. Private banks cater to the banking and financial needs of wealthy individuals or individuals with high net worth. Private banks and wealth management firms usually give clients a main representative and may also use a team approach to provide access to a number of experts on different financial subjects. Well, I heard that before. Doesn't that sound kind of familiar? Does that sound familiar? I'm telling y'all. What that sound like?
MWR.
Well, that sounds an awful lot like MWR Financial, where they give the everyday average American a team of financial experts to help them to become wealthy on all their financial. That sounds familiar. Okay. All right. Well, let's continue here because that show sounded kind of familiar to me. All right. Let's go on down here and read some more. Get down. All right. Private banking versus wealth management. Private banking typically entails a private banker helping a customer with only their banking. Private banking branded products may include a checking account or savings account. These may differ somewhat from the regular products offered at the bank. For instance, the private bank product may offer higher limits. Wealth management generally centers on investments, portfolios, management, and other specialty areas. Wealth management services can include access to tax specialists, insurance specialists, estate planning specialists, trust services, and other specialists on the team. Private banking and wealth management are definitely overlapping to some degree and often can be used interchangeably, says Michael Foy, Senior Director of J.D. Power's Wealth Management Practice. Ms. Pompey, he got the same title as you, Senior Director.
I see.
Did you just get promoted to Senior Director with MWR Financial?
Yes, indeed.
Oh, my Lord. I feel honored just to be in your presence.
We have
All right. Eligibility requirements for private banking. Private banks and wealth management firms usually require a minimum balance. For private banking, this may include just deposits with the bank, or it may also include investments, individual retirement agreements, or individual retirement accounts, IRAs, or other types of investable assets. The minimum amount required varies. I don't even want to read that next part. let me go back and start over because I need to get myself set for that. The minimum amount, I still ain't ready. All right. The minimum amount required varies. 1 million. y'all, yes, y'all are seeing this right. $1 million will most likely be the minimum level of most private banks. Now, look, y'all, your bank has private. You can go to Wells Fargo. I called my bank, Wells Fargo, just to make sure. I asked them, you know, can I talk to somebody about private reserve banking? They said, sure, Mr. Butler, you got to make an appointment for that. I was okay. So I made an appointment. Went down to Wells Fargo with my appointment. They saw me. Mr. Butler, I understand you want to talk about private reserve banking. Yeah, I do. Well, we're here at Wells Fargo, for our preferred clientele, for our preferred accounts, that's banking that's reserved for our preferred, account holders. Now you've met some of the requirements for preferred, account holders, but we have other requirements that you haven't shown a proclivency, as he said, to match that yet. That's okay. And what are those requirements? Well, you got to have at least $100,000, in our bank, and you do have that with your various accounts. And you also, however, have to have at least $50,000 of deposits every quarter. On top of that, the private reserve account that we have, you have to put in a minimum of $50,000 to open up a private reserve account. You also have to show that you have an income. You have an income that is above $1 million per year. Ooh.
Technical.
So yes, private reserve banking is something that's been around for a very long time. Your bank has it right now, but it ain't for you, not with them. Okay, this is why wealthy have been getting wealthier and wealthier and wealthier. And you can understand that when I break down how the private reserve bank account works. All right, so let's finish here. Woo, we got over that $1 million deposit. For instance, Chase Private Client requires an average balance, daily balance, an average daily balance of only, look what they're saying, of only $250,000. Well, if I just only had $250,000 laying around, so I'd be all right with it.
Only.
All right? Or more. Or more. How many of y'all got Chase bank accounts right now? Probably a ton of y'all like they got Chase bank accounts right now. But you ain't gonna get no private reserve bank account with them because it ain't for you. All right. The balance may include qualifying linked deposits and investments, as opposed to private banks, which usually just have a minimum balance requirement unless investments are involved. Wealth management firms are likely to have a fee model that charges a certain percentage of the assets being managed. J.D. Power, y'all know who that is, classifies people with $1 million or more in investable assets as being in the high net worth category, and from $100,000 up to $1 million as being in the mass affluent category. Thus, that's kind of the way we view the world. For it says, most of our clients who are basically large banks and brokerages tend to view things the same way. Ultra high net worth is generally the classification for those who have more than $10 million in investable assets. Now, now you all are beginning to understand why you haven't heard of private reserve accounts, right? Because you're not in that 10%, and you're not in that 1%. You're not in that 10% of the world's population that's wealthy, and you're definitely not in that 1% that's independently wealthy. Those are the only people who in the past traditionally have been even offered the opportunity to take part in private reserve banking. Okay? Now, let me tell you how private reserve banking works. Now, this is gonna upset a lot of you. It's gonna hurt a lot of you. It's gonna make y'all say to yourself, "Oh my God! Oh my God! Oh my God!" That's how the wealthy people keep getting wealthy, and we just can't even. And we can barely get ahead. We can barely, get by. But they just got all these things that they got reserved for them that cause them to just make more money, more money, more money, more money. if you do not want to get upset, okay, by what I'm about to tell you, if you do not want your view of how money is, how it operates, if you do not want to have your mind open up to the possibilities of private reserve banking, I suggest you get off this live right now. Go, watch some girls shaking or fights, or go watch something else. Go watch what you normally watch. But you don't want to watch this if you don't want to know how to become wealthy. Okay? This is the time. I'm giving you all your time right now to exit. Because the people that want to know how to become wealthy and want to know how the system has been screwing you over for decades, stay tuned. Because I'm about to shock a lot of y'all. I'm about to wake a lot of y'all up. All right? Let's go back and let's look at private reserve banking. Here. All right. So the thing is this versus this, 401k versus private reserve banking. All right. I think the best thing I can do for you all is to play for you all what I did on I put this on YouTube when we talked about private reserve banking. I'm gonna play this for y'all, and I want you all to listen to it. Because it's a lot. and I can go back over it, but it is a lot. I'm not gonna lie to you, it's a lot. Let's go to our page, MWR. Let's go to MWR Financial, Team Assurance USA, okay? Let's go to our page, MWR Financial, Team Assurance USA. And this is on Facebook, and we're on Facebook. All right, we are broadcasting live on that same page too again today. And I'm gonna show you all a video that I did. Now, yeah, I'm a little bit overweight. I gotta lose some weight. I know that. I'm working on it. My wife, she on me every day. Do your exercise, lose some weight. But we're gonna play this out for everybody and let you all take a look at exactly how private reserve banking works. I'm gonna go ahead and make this full screen. I'm gonna go ahead and start to play. And I think you all got the volume there. We're gonna fast forward this a little bit. Y'all need to see me get my coffee and stuff. We're about to get started here in just a second. I am getting everything for my live. Now, the last broadcast I tried to do live, it got kind of cut short because my battery ran dead. We're about to get started here in just a second. Okay. Let me cut this volume out. But my battery ran dead, so I really couldn't do my live the way I wanted to. But now I've gotten my battery power back up. I want to make sure we got enough people. That we're able to get done what we need to get done. I want to make sure everybody can, is going to be here, and because I want y'all to hear what I got to say. Because my last broadcast got cut short. I don't know if that was by design or if someone was trying to keep y'all from hearing something. But look, what I'm about to share with you all, wealthy people don't want you to know. People who have money, people who are wealthy, they don't want you to know this stuff. But I'm going to share it with you because I'm here today to tell you that the only difference between wealthy people and everybody else is knowledge. Because wealth truly is a choice. It's not a privilege. It's not a right. Okay, it's a choice. You can choose to be wealthy. Now, if you're asking me how do I know this, because a lot of y'all who know me know that 10 years ago I was homeless. Y'all saw me walking around on the streets with my little laptop, staying at the homeless shelter, walking to work every day over the Trojan labor, bike breaking work, digging ditches, and all that type of stuff. That was me 10 years ago. But today I'm a self-made millionaire. Now the question is, how did I make that happen? That's the real question. And I'm gonna tell you, two things that put me on the path to becoming truly wealthy. One was knowledge. I had to relearn what I thought about money and how money is made, primarily how wealth is created and how wealth is generated. More importantly, how generational wealth is created and how it's passed on. The second thing that happened to me was I started following a YouTube channel, a gentleman by the name of Brian N. Bean. Okay, now Mr. Bean is a young African American gentleman who made his first $1 million when he was in his 20s, and then he lost it. And then he got a real education. He started a YouTube channel because he's a wealth management strategist. And I started following him. I started, and I was still homeless when I started watching his videos. And I started taking his advice. He would give advice on how to restructure your W-4 form. For those of you who don't know what a W-4 is, it's that thing you filled out when you first got your job. A lot of y'all don't even remember what it was. But you need to restructure that so you can put more money back in your check. As a matter of fact, there's something on the link right here on this video that says take the instant pay raise challenge. Go in there. It's free. It's free. Doesn't cost you anything. Click on it. Take the instant pay raise challenge. You go in there and you put in, all your stuff. How many miles you drive per day. How much money you spend on food. Your utility bill, your mortgage, your rent, whatever you got, you're paying for. You put all that in, and then Then when you hit calculate, it's going to tell you after doing your W-4 form. It's going to tell you how much money your next paycheck, how much money it's going to give back to you each and every month, how much money is going to increase your current paycheck every month. Now, when Mr. Bean was talking about redoing the W-4s and stuff, I just followed his advice. I was working at the labor hall, Trojan labor, walking to work, digging ditches, making minimum wage. I think my take home was like 200. Sometimes 109 and sometimes $170 a day. At the most, it was like 225. Actually, that's if I worked, 10 hours a day with some overtime or whatever the case it was. Because I was really working minimum wage back then. Minimum wage like $7 an hour, right? But listening to Mr. Bean, and I did my W-4 form and I turned it in. And that very next week, my check was $360 some. Increase of almost $150 per week. That's like almost $700 more per month. I've got these calls coming in. Let me shut this off. That's like $600-700 per month of an increase in my weekly, check. So $150 a week, $600-700 a month. That's a lot of money. All right. Then I kept following his advice on restoring my credit and all that type of stuff. Well, let me fast forward. Mr. Bean now is like, well, I won't even tell you about that. I'll tell you about that later. But let's get into why the wealthy don't want you to hear what I'm about to tell you. And those of you who never thought that you could become a millionaire, you never thought that you could become wealthy, you are wrong. You can't. Everybody can become wealthy. It's just a matter of you knowing what I'm about to tell you and then taking the action on it. Because I did it from a homeless shelter and became a self-made millionaire. And I know you can do it too. Okay? So get ready for this education. You might want to take some notes. Hit your record button or something, because you all are gonna want to hear this. And when you hear this, you gotta say to yourself, my God, I never knew this stuff. Okay? Because they kept it from you. Now, as I said before, the only difference between the wealthy and you is knowledge. That's it. Because wealth is a choice. It's not a privilege or a right. How many of you all remember back when companies used to pay a pension?
Now, I've already gone over that part.
And this is going to be an education. So y'all,
I'm going to fast forward this little because I've already given y'all the history on pensions.
And start paying for their own retirement.
Let me fast forward because you all have heard this.
They're out of money. They have no money set aside. I'm for retirement. Now, don't forget, they charging you $15 a All right, here we go. Let's start here.
To grow up, get a job, open up a bank account, put your money out. Y'all get ready, because I'm about to shock the world. I'm about to shock all of y'all. I really am. I promise you. You're going to say to me, I didn't know that. I didn't know that. And you didn't know it for a reason. Now, we've been taught from the time that we can listen, from the time that we can talk. The best thing to do is to grow up, get a job, open up a bank account, put your money in a checking account, in a savings account, save your money, you'll be all right. Nothing could be farther from the truth. Okay? That's what they taught us. They taught us to do that. But when you put your money in a bank account, a checking or savings account, I mean, what happens? First of all, most of them want to charge you anywhere from $12 to $15 just to hold your money each month. Secondly, they tell you, well, you put it in the bank account, your money's going to grow interest. Well, 1.25% per year? At the most, what, 2.25% per year? So if you got $1,000 in the bank and it's just sitting there, at the end of the year, you made an extra $20 on it. That's helping you? Now, don't forget, they charging you $15 a month to hold your money. So chances are, by the time you get to the end of the year, you're overdrawn because you're being charged $15 a month for them to hold your money. So you got to keep pumping money into your regular bank account just to make it keep up. Does that seem right to you? You think the rich doing that? You think wealthy people doing that? You think I'm doing that? No, sirree. We're not doing that. We don't do that. Okay, that's not what we do. Okay, that's not how we roll. Okay, and I'm about to educate you all on how you can roll that way too. Now, so you put your money in a bank. That's what you all have been taught. Put your money in a bank, regular bank account, savings account. If you're really good and you got a business, you open up a business account, right? Yeah, that's what they tell you. But it's the same thing. Your money's only growing by a bit every year. And if you're really good, you put your money in some type of investment earning account, an IRA, a Roth account, a money market account, a bank, a government annuity, bonds, a government bonds, U.S. savings bonds, something like that. But all that stuff is still tied to the stock market. It goes up and it goes down. You could make money, but you can also lose all your money. Now, the question is this. What if there was some type of account that you had zero risk of losing your money? Not only that, what if there was some type of account that when you put money in it, it just continually goes up, 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 and it never goes down? Y'all probably think, so, well, there ain't no such account as that. Yes, there is. It's called a private reserve account. Now, if you've never heard of a private reserve account, don't feel bad, because only 10% of the population, of the world's population, is wealthy. And only 1% is independently wealthy. Me and my wife, we're trying to get to the 1% now. We started on that 10%. Now we're trying to get to that 1%. Okay? So the other 90%, yeah, y'all didn't hear about this because they kept it from you. They kept it from you. They didn't let y'all, and they didn't teach you this in school, but in their schools they did. In their boarding schools, in their military academy schools, in their country clubs, in their brunch meetings, and at the golf clubs and all that type of stuff, at the yacht clubs and all that stuff. And they taught this all the time. They even talked about it, in their churches, around their dinner tables. They've been teaching this stuff to their kids from the time they could hear and talk. But you ain't had these conversations in your household. You didn't have these conversations. Not at your churches, not at your schools. You didn't have these type of conversations. Okay, this stuff was kept from you for a reason. Now, as I mentioned before, the wealthy push their money in what's called a private reserve account. Now, you say, what is a private reserve account? A private reserve account is an account, much like any other investment account, but it's tied to the market gains and not the market losses, which means whatever money you put in is going to reap the market gains, and the market does something every single day. It doesn't just do something once a year or once a month. It does something every day. Y'all hear it all the time. You hear it all the time. The S&P enjoyed this 20th straight day of market gains of 26.2%. The NASDAQ is enjoying its 30th straight day of market gains of 14 points and rising. The NASDAQ plummeted 27 points today. Investors are worried. Y'all hear that all the time, right? But what exactly does that mean? How does that relate to a private reserve bank account? Because the private reserve bank account is this. When you put your money in it, it is only tied to the market gains, as I said. So on day one, if you put it in and the market gains 10%, you got $1,000 in it, you just made an extra $100 on your $1,000. On day two, let's say it moves 5%, right? Now here's the kicker. Because you made $100 the day before, now you have $1,100, so your 5% increase is based on $1,100. So you didn't make $500, you made about $600. And so on and so on and so on. Now, what happens when the market starts to go down? Well, when the market starts to go down with the private reserve account, your money levels off. It freezes. It does what's called a market rate lock. So it freezes. It's traveling along like this. And then when the market starts going back up, your money starts rising back up with it and making gains. So you are never losing money. You're always making money. See, this is something that the wealthy has been doing for decades and decades and decades. They just ride their money up. Their money never drops. They don't get no little bitty percentage at the end of the year like you all get. You know, we don't get that, but you all get, like at the end of the year, you put your money in the bank, you let it sit there, you paying $15, $20 a month for them to hold your money. And then whatever you're putting in, they give you an extra 1.25% on your money at the end of the year. Yeah. Hey, I was doing that too before I learned differently. Now I have the knowledge. And the knowledge took me from being homeless to a self-made millionaire. Now, let me tell you something else with that private reserve account, because that's not even the best part. That's not even the best part, not even close to the best part. Here are some of the best parts of a private reserve account. Let's say you don't put your money in. Let's say you took the instant pay raise challenge, and the instant pay raise challenge showed you how you can put an extra $200 a week back in your pocket, on your check. At the end of each week, your check went up $200 because you restructured your W-4. So your paycheck just went up $200. If you took that same $200 a week, right? 2, 4, 6, 8, about $900 because it's 4.33 weeks in a month. About $900 extra bucks per month. If you took that same $900 extra bucks per month, let's round off to an even $1,000, and you put that in your private reserve account, right? Now, get this. First of all, let me explain this to you. The reason why you all have never heard of a private reserve account, the reason why is, well, I'll get to that later. All right, I'll get to that later. But let's go back. All right, so you got that $1,000 in your private reserve account, right? You're putting that in every month now. A year, 2 years down the road, your private reserve account is $60,000, $70,000, because that's how the private reserve account rolls. It don't roll like your regular bank account and your business account and your savings account and your IRA account, getting them little bit of gains, once a year or every quarter or whatever it is. That private reserve account is gaining money every single day, baby, because the market is doing something every day, right? Every day, up and down, up and down, up and down. About 70% of the time, the market is going up. 30% of the time, it's going down. But your money is on tied to the 70% of the time that's going up and not to the 30% of the time of where it's going down. So if you got 365 days in a year, you got 70% of the time your money is going up. That's about 260 days that your money is making money. And the other 100 and some odd days, you ain't losing no money because your money is not tied to the market losses. It's only tied to the market gains. All right? So with the private reserve account, you doing that, putting that money in every month, $1,000 a month. 2, 3 years from now, you got $60,000, $70,000, maybe $100,000, depending on how well the markets have done that year during those months. So you got $60,000, $70,000, maybe $100,000 in your private reserve account, because that's how it rolls. They don't roll like that little old bank account or savings account. It's called private for a reason. That private reserve account, it rolls like that. All right. So now you got $60,000, $70,000 in your private reserve account. Let's say you need $10,000 to buy your son or daughter a car. or you need to add another, wing onto your house. My wife and I, we're turning my garage into my man cave and my studio. I figure it's gonna take me about $10,000 to do that, and we're gonna put another 3-car garage on the side over here and create a courtyard in the middle. I figure that's gonna cost us another $30,000-$40,000. Now, ordinarily, if you need that kind of money and you drew it out your bank account, if you got that kind of money like that, first of all, your bank account don't grow like mine do. Your bank account don't grow like the wealthy people do, because you don't have a private reserve account. You got a regular bank account. That private reserve account, it grow like that. It rolls like that. All right. So you now got in your private reserve account $60,000, $70,000, $80,000, $100,000. You need to borrow out $10,000. You need to take out $10,000 to pay for your son's or daughter car or their education or tuition, or add onto your house, or you just want 10 grand in your pocket to walk around with. Now, if you had a regular bank account, you would draw that money out, which means your $60,000 now dropped to $50,000 balance. You don't do that with the private reserve account. No, sirree, because I told you, it don't roll like that. When you draw money out of your private reserve account, it's considered you borrowing money from yourself, because the private reserve account is treated just like it's your own bank. So when you borrow money from yourself, that's money that's still owed to you. It's still money that's on the books. It becomes a debt back to yourself. So your balance stays at that $60,000, $70,000 and continues to ride the market upward and make more money. Well, I tell you what, the rich know how to make money, boy. Once you learn this, you ain't gonna never look back. Now, that's still not the best part. Here comes the real part. The rich are slick, man. They slick. Here's the real part. When I learned, I said, oh, my Lord. You mean to tell me I can do this right here and do this right here too? Look, let me tell you how the rich roll, how they've been rolling for decades. When you borrow money from yourself, from your private reserve account, the money you borrow is considered a loan to yourself. So you get to set your terms of repaying that loan back to yourself. So you can say to yourself, well, self, I want to charge myself 1.25% interest on the money that I just borrowed from myself. And I want to pay myself back $100 a month, or $150 a month, or $50 a month, or whatever I decide I want to pay myself back at. Right? I negotiate that with myself. Right? And when I'm paying myself back that money, oh, this gonna get you. I get to collect the interest on the money I'm paying myself back that I borrowed from myself. Look, man, when I found this out, I said, oh my God. So now let me put this in something, let me apply to something that every one of you can relate to. Every one of us have bought cars. Some of us have bought a home, or whatever the case may be. Now, if you're buying a car or home, you're going to the dealership. Mr. Dealer, I want this Mercedes over here. I want this Range Rover over here. I want this Cadillac over here. I want that Jag, right? Mr. Dealer says, okay, well, that Range Rover right there, that Range Rover is going to cost you $50,000. That Cadillac right there going to cost you $45,000. That Jag is about $60,000, $65,000. Now, we can finance that for you with some money down or whatever the case may be. So you give them some money down, you finance the car. Now, your $40,000 Range Rover that you bought, whatever the case may be, when you're paying it back at $700, $800 a month. Right? That ain't bad, $40,000 car. Right. You're paying back the interest to the finance company. You're going to pay them an extra $10,000. So your $40,000 becomes $50,000 after you paid it back. Right? You don't own it yet. Bank owns it. You miss a payment, you'll see who owns it. All right? Now, you think that's what we do? Think that's what wealthy people do? No, wealthy people don't do that. No. Wealthy people don't do that. We roll a whole different kind of way. We go to our private reserve account. We borrow that $40,000 from ourselves. And our $100,000, $200,000, $300,000, whatever money we got in our private reserve account, the balance stays the same. It don't drop $40,000 because we borrow $40,000 from it. No. It stays the same. It keeps riding up, making more money. Then I get to set my own repayment for a car or the money that I borrowed from myself. So I borrowed that $40,000 from my private reserve bank account myself. I go to the dealership. I said, Mr. Dealer, I want to buy this car. I want to pay cash for it. That's right. There you go. Transfer the money. Bam, it's there. You give me the title. It's paid for. No chance of me losing it. No chance of it getting repossessed. Same thing with my home. I don't go and mortgage a $266, $270, $280, $290,000 home. No. Why would I do that? I gotta pay. What's the average rate now? 3.75% is what the going rate is right now. 30 years. If I borrow $280,000, I'm paying back $390,000, almost $400,000. You don't want to do that. That's what y'all do. That's what people do who don't know no better, who don't have the knowledge. But people with a private reserve account, you don't do that. What you do is you borrow that money from yourself, right? You go and pay for that home cash, or pay for that car cash, or you transfer the money over into the realtors or whoever it is you're buying that house from. You get the deed to the home. You get the title to the car. The day you sign that dotted line on purchasing that home, your equity in that home is $290,000 the day you bought it. You got equity in it already. and you get to dictate what you are going to pay yourself back. You get to dictate your own terms, negotiate your own terms. So when you out there paying for a car, $40,000 car, and you paying $600, $700, $800 a month for it, I'm telling myself, well, self, I'm gonna pay myself back for this Range Rover a couple $100 a month. Hey, I think that'll work. A couple $100 a month, I'm gonna pay myself back. I'm gonna charge myself an interest. The average interest now for a car loan is about 8, 9, 10, 12%. I'm gonna charge myself 1.2%. And I'm gonna collect the interest that I'm paying myself back for the money that I borrowed from myself. Same thing with my home. I'm collecting the interest on the home that I borrowed $290,000 from myself, right? I'm paying my own interest back to myself, and I negotiated my own repayment to pay my home back to myself. I'm not going to charge myself $1,800 a month like my neighbors who got the same, price house or less house or more house. They're paying $1,800 a month, $2,000 a month, $1,400, whatever they're paying. I tell myself, well, self, I want to pay myself back $600 a month, or $700 a month. That's how we roll with a private reserve account. You get to tell yourself what you want to pay yourself back. And I get to collect the interest on that money I'm paying back to myself. So by the time I finish paying for my home or my car, the money that I made in interest offsets the money that I paid for the car or the home. So my car that I paid $40,000 for is not really $40,000. It's $19,000. The home that I borrowed $290,000 for is not $290,000. When I'm finished paying for it, it's only about $180,000. That's how the rich roll, y'all. That's how wealthy people roll. That's what they've been doing for decades and decades and decades. It took me about 50 years to find it. Well, actually, it took me about 40 years to find this out. But when I found it out, well, I'm in there like Flint. Because I found that out. I'm like, man, I'm getting in that. I'm getting part of that. I'm getting some of that. And that's how I went from homeless to self-made millionaire. Now, the question is, why haven't you known about this? Why is everybody not been doing this?
All right, look, I've already told you all why you don't know about it, why you hadn't known about it. All right. Now, I hope that educated a lot of you all, but I wanted to add something to that because look here, we just found out. Let me go ahead and unmute everybody because I had to mute everybody because we had some background noise there. All right, there we go. Got y'all. Now y'all can talk to me. All right. Did everybody get a chance? Did everybody hear that portion of the video?
Yes, I heard it.
Yes.
All right. Good stuff, right?
Very good stuff.
It is.
Good stuff. Good stuff.
Look,
Good
y'all.
stuff.
Look, now I've told y'all already that the reason why 90% of the population has never heard about private reserve banking is because, hold on, get my stuff back right here. The reason why 90% of the world's population has never heard about private reserve banking has been because, hold on, y'all, I'm trying to do several things here. Trying to get my stuff back right. The reason why you all haven't heard about private reserve banking, and we've already talked about that, because it's not for you all. Traditionally, it has not been for everybody else. It's only been for the wealthy, people that have at least $1 million to open up a private reserve account, and people that is bringing in more than $2, $3, $4, $500,000 a year, people that can start off, with $50,000 at the bare minimum. Okay, so it was not meant for everybody else. It was only meant for wealthy and the affluent. That don't sound right, do it, y'all? Right? Does that sound fair to everybody?
No, not at all.
All right. Well, hey, so Donald Trump made billions and only paid $750 in taxes. Amazon made trillions and paid $0 in taxes. Well, that ain't uncommon. That's just how the world works, y'all. That's just how the world works. You either learn how to play the game or you
Get played
by the game. Now, here we go. Now, I know a lot of y'all probably say, well, Calvin, why did you open our minds up to all this stuff about private reserve banking and I can't even qualify for it? Okay. I'm not that mean, y'all. I'm not going to do that to you. All right? I'm not that mean. All right. All right. Now, there is an answer for you. MWR Financial. They're a company that started out about a year ago. Okay. So MWR Financial is a new company. They're about a year and 3 months, year and 4 months old. They started offering these type of products to the everyday American, which means they lowered all of the high income standards and the qualifications, everything that you had to have to do it with your bank, with every other bank out there. They introduced their private reserve. They went to an investment banking firm. I can't think of it. Hey, can any of y'all remember the firm who they do business with? What's the name of that company?
Cal Choice Financial.
Thank you. So I knew somebody. Boy, my students, they're on point. What's that again?
Cal Choice Financial.
Cal Choice Financial. Let's look them up. Because I don't want y'all to think we just making stuff up here. We don't do that over here, right? We don't just make stuff up, do we?
No.
No.
We got facts.
That's not how we do it. We don't make stuff up. We want to make sure that y'all understand that these are factual things. This is stuff that's real. So let's go to Cal Choice. There it is right there, because I've been looking it up. That's not me right there. That's another gentleman. Cal Choice Financial. All right. This is Cal Choice Financial. This is the investment banking firm that MWR Financial went to and said, look, we want to do something revolutionary. We want to do something that's going to shock the world. We want to do something that's going to change the wealth structure in this country. Mm-hmm. Remember I told y'all about 9 months ago, 9 months ago, I told you there was going to be a shift in wealth.
Yeah.
Yeah. Now, y'all remember me telling y'all that. Some of y'all remember seeing the video, and some of y'all probably say, man, that Calvin full of shit. You don't know what the hell you're talking about. Okay, well, keep thinking that, all right? There is a shift in wealth coming. It's already started before we introduce this. Look at companies like Sears out of business now. JCPenney's out of business now. Neiman Marcus out of business now. Right? Look at all these brick and mortar companies going out of business, left and right. Companies you thought would never go out of business, they're gone. Yeah. And more companies are following. But companies like Amazon, richest company in the world on the planet right now. Why? Because you don't have to walk into that store. You can just go online and do whatever you need to do. There's a shift in wealth, you all, that's coming. And I told you all back then, you're either going to be on the wrong side of that shift or you're going to be on the right side of that shift. And I told y'all back then when we were starting our company, Assurance USA, we were structuring ourselves to be on the right side of the shift in wealth.
Thank God.
Okay? And that's where we're at now. We are all standing on the right side of that shift. And one of the biggest, most important, and most influential movers of that shift is going to be MWR Financial and Cal Choice. Because MWR went to Cal Choice and said, look, we want to introduce the rest of the world to private reserve banking. Now, of course, people over Cal Choice probably looked and said, oh boy, hold up. Now, the rest of the world can't afford private reserve banking. We know that, but we want to change that. We want to make it affordable for everybody to afford private reserve banking. Cal Choice said, well, why would we do that? Why? Because if you make this affordable to everybody else, it's like you all being the first of a tidal wave.
All right.
Hold up. Now you got my interest. Now I understand. Because remember, only 10% of the population right now can afford a private reserve bank, or 1%. Only about 11% of the population can afford it. And out of the 10% that can afford it, all of them don't even know about it. Right? So yeah, you can continue on making this available to the super wealthy and making, good money on the super wealthy, or you can open it up to the rest of the world and make a whole bunch of money.
Mm-hmm.
And help them get wealthy too. Because the world is starving for this right now, especially here in the United States. We are starving for something like this. Because the gap between the wealthy and the rest of us, or the rest, I should say the rest of everybody else, was growing farther and farther and farther apart. Is it not?
That's right.
That's true.
I mean, that gap is getting farther and farther apart. More and more people. Do you know that 75% of all Americans by the time, no, I think they're about 85% of all Americans by the time they be 65 years old only has about $5,000 in their bank account. That's sad. True. That's sad, man. They ain't got enough money to pay for their own funeral. I'm serious. Y'all know what I'm talking about. Y'all know what I'm talking about. You hear people all the time. We're trying to raise money to pay for Jimmy John's funeral.
Yeah, that's true. I mean, yeah, you're right.
Come on now. Come on now.
It's not funny, but it's true.
Yeah. I mean, people be having bake sales and fish fries just to raise money to bury somebody.
That's true. That's true.
Let alone you ain't got no money to leave to your children or to future generations.
They leave us debt.
Exactly. We are the generation of leaving debt, but we need to change that. And here's the sad part: you can change it. You can change it because wealth now, yes, wealth in the past it was about privilege. It was about right,
mm-hmm. Right.
But wealth now is about choice.
Yeah.
Yes. We were discriminated against. Yes, we were disenfranchised. Yes, we were redlining practices were practiced against us, keep us out of buying homes and getting businesses, moving to the next thing. All that stuff happened. Systemic racism, yes, it is real. But all of that got its roots from where? Denying us the knowledge of how to become wealthy.
That's right. Yeah.
That's the only difference. Now that is the only difference between being wealthy and everybody else is knowledge. Wow. And I just dumped the knowledge on you. So that's not an excuse anymore. Just like we went on here and pulled up private reserve banking and pulled up all this other stuff, y'all can do it too. It's right there on Google, on Bing. It's right there in the palm of your hands. No excuse. No excuse. Because you have the knowledge now. Now, the only thing you have to do now is what? Act on the knowledge. Take the power and act on it. Now, I know some of y'all probably say, but Calvin, you just told us that I need X amount of money to get a private jet. No, you don't need that now because of MWR Financial. because of Cal Choice and through MWR Financial. Now, Cal Choice does not make this available to everybody that comes over and says, I'm going to get a Cal Choice account in this. No. Cal Choice has a contract with MWR Financial. Okay? And you're probably saying, who the hell is MWR Financial? Well, that's us. Those are the people that we are in business with, MWR Financial. This is MWR Financial. Okay? This is MWR Financial, home of the instant pay raise. MWR Financial has made it possible for everybody to get their own team of financial experts for less than a cup of coffee per day. So the same financial experts, because your financial experts are coming from where? Where? Cal Choice, right? So your team of financial experts are coming from Cal Choice. These are people who know what they're doing, but you can only get them at this price through MWR Financial, $79.97 per month. Oh, did I stutter? No, I didn't stutter. Y'all heard me right. $79.97 per month. You can have your own personal team of financial experts to, first of all, do what? What do they do, everybody? They do some certain things, right? Because when you join that membership for $79.97, less than a cup of coffee a day, $2.63 a day. Some of y'all spend more than that on cigarettes. Some of y'all spend more than that on beer. Some of y'all spend more than that on lottery tickets. Some of y'all spend more than that. Y'all just give away that much money every day. Don't you now? Right?
Right.
Yeah, you blow that in a heartbeat. So why not take that money, hire yourself a team of financial experts, just like Donald Trump has, just like what's he got to own Amazon? What's his name?
Bezos.
Yeah, Bezos. You think those people are smart enough to manage their own finances? No. Most wealthy people are dumb as a rock. Case in point, Stop counting the votes. Yeah, look. Most wealthy people are dumb as a rock. But they hire people who are smart enough to know how to manage and help them grow their wealth. Now, you can have that same advantage. You can hire your own team of financial experts, first of all, to work on your money max. Now, what is money max? Money max, they're going to help you to keep more of your money in your pocket. They're going to help you, no, not help you. They're going to do it for you. All you got to do is send them the stuff that they ask for, and they do the work for you. Now, you can't get no better than that, y'all. Okay, the first thing they're going to do is you're going to send them your last 2 paycheck stubs, and you're going to send them your last 2 years W-2s or last 2 to 3 years tax return, right? When you send them your last 2 paycheck stubs, they're going to immediately go in and they're going to redo your W-4. Now, for those of you who don't know what your W-4 is, that's that thing you filled out when you first got your job in H&R department. All that people do filling out, you had a W-4. How many dependents I want to claim and all this type of thing. That's your W-4. Okay? They're going to redo that because chances are there's a 99.9% chance that you all filled it out wrong. You don't know you filled it out wrong because you just filled it out the way the IRS says you should fill it out. Well, guess what? The IRS is trying to get most of your money that they can so that they can use it to make more money and then give you back a little bit of it, not even everything that you gave them, but then took your money and used it to make themselves millions of dollars for the government, and then they give you back a portion of your money. Are they doing you any favors?
Not at all.
I mean, now if you want to do me a favor, give me a portion of that money that you made on my money through those investments. Do that. I bet you they ain't gonna do that. No, but y'all out here running around happy because you got money back from the IRS at the end of the year. It's your doggone money, and they didn't even give you all your money back, and then they took your money and made millions of the money you gave them. Come on, people, change the way you think. shift your income back to where it belongs, in your pocket, in your hands, because you can do more with it now than you can do with the little bit that they give you back later. So the first thing they're going to do, they're going to show you how to shift your money back to you. They're going to fill out your W-4 form properly. They're going to do it the right way. Then they're going to send it back to you so you can take it and give it to your employer, and your paycheck the very next week can go up. And you keep getting that extra amount every week you get your paycheck. That's the first thing they're going to do for you. Now, the average truck driver, we're talking about truck drivers today too. The average truck driver, we did these calculations, a while back. Do we not? Why? Because we give y'all something that you all can take part in called the Instant Pay Raise Challenge. It's free. It's free. I'm going to show it to you all here in just a minute. It's free. All right. When you click on the Instant Pay Raise Challenge, you basically go in and put in, all your stuff. It's simple. It's simple. Okay. When you all see us put it on Facebook, people click on it because it's free. It's free, and it's going to help you. It's there for your benefit. It really is. Now, I'm going to show you what the Instant Pay Raise Challenge does. This is the Instant Pay Raise Challenge. So, So when we share this with you, all you got to go in and do is go in here and put in, the number of miles you drive. We had already did this once before, where we determined that the average truck driver. Now we're talking about the average truck driver. Now those of you who don't drive trucks, you can do the same thing here too. But we're going to do this on the average truck driver. Do we have a truck driver in the house here right now? Is there a truck driver?
I'm a truck driver.
All right. How many miles you drive on your average load?
On my average load, probably about, I guess but right now I'm on one that's like 18. So I guess normally about maybe, it varies. I say about maybe 1,500 miles.
1,500 miles?
Yeah, between 15 and 2,000 a week.
All right. And how many of those loads you run each week?
Well, it varies because I'm with Prime, so I'm with that company.
Okay.
So yeah, I might run about three, normally three.
About 3 of those a week. So 1,500 times 3. All right. Now this is a truck driver talking to you all. For all you truck drivers out there, this is a truck driver, and you are what? A company driver?
No, I'm a lease. I'm the owner operator.
Okay, you're an operator. But company drivers drive a lot of miles too. I know because I was with company transport, and we ran about 7,850 miles per week between the two of us. Company drivers, team drivers, each of us doing about 3,750 miles each. Okay, that's how truck drivers roll, y'all. We ride. Okay, so 4,500 miles. All right, so let's do that. Let's put that in. Let's go back over here to our, let's put in the 4,500 miles. No, I take that back because I got to do it by the month. My bad. Let me go back over here to my calculator. Back to my calculator because that's a week, right? Do that times 4.
Yes.
So let's do it, for a month times 4.33 weeks in a month. That's 19,485 miles a month. Boy, you driving some miles. That's how them truck drivers. That's how them truck drivers roll now. I'm told you. Over the road. That's how the truck drivers roll, baby. So 19,000. What was that? 19,485. Y'all remember these numbers for me because I have to go back and forth. 19,485, right?
Yes.
Mm-hmm.
So far, you're going to be able to take deductions off your yearly taxes of $94,930.92. That's your deduction on that. All right. What do you what's your cell phone expenses?
My cell phone is I have
I forgot something. Are you married? Single? Do you got family? Back at home?
I'm married. Married with kids. Yeah.
All right. So that's what you drive on the road. What does your family drive at home?
They have a Honda.
Okay, but how many miles do they drive a month?
Well, I say probably not much because we don't really move the car too much. My husband's out here with me.
My husband's out. He's out here with me.
All right. So on average, that's about what, a couple hundred miles a month?
Yeah, not much.
All right. So let's increase that to 19,685.
Okay.
$995,905. All right. Cell phone bills for you and your entire family. Your cell phone bill. What's that?
Oh yeah, mine alone. I got Verizon. I have to have Verizon, but everybody else has Metro. So I would say about it's about probably $450 a month.
And $450 for the whole family?
Yeah, about $450 a month.
What did you pay for the phones?
My phone is probably a little over, my phone is probably a little over $1,000, but I paid for that right out, so I paid.
Okay, but still, but you can still deduct that. So $1,000. So you pay $450 a month for your phone, plus you paid $1,000 for your phone. So you figure $1,000 divided by 12 months. So you're doing it for the year. Do that right there. That's $83 a month. So there you go. So you add that to the $450.
Mm-hmm.
Y'all see how this is working out? Hold on here. So you got $83.33. You got $83.33 plus $450. That's what? Oh, hold on. If I can do that. That's plus the $450. That gives you $533. All right, here we go. $533 on your phone. So $533. They're gonna give you $6,396 deduction. Your internet. What do you pay for that each month?
My internet, probably about, with the internet and the house phone, it's probably about $115 a month.
115. All right. All right. Cost of business meals. You're on the road all the time. So what do you all average? I know I was averaging about $35 a day on meals when I was on the road, but it's two of y'all, right?
Mm-hmm.
So it's about
It's
6.
two of us. It's two of us. I mean, that can get expensive. So what we do is we try to go to Walmart. We try to go to Walmart so we can cut the cost a little bit.
I understand.
So I would say probably about, we could try to keep it to about 150 every other week. So, or sometimes, 150 a week. Sorry.
All right. So 150 a week. All right. All right. One moment.
Mm-hmm.
$649 a month.
Mm-hmm. Yeah, and then for the kids, we send money for the kids.
Okay.
That's probably about, well, then again, you're doing my business expenses, right?
No, it doesn't matter. I mean, no, this is
for
for
the
business.
household?
Yes, for everything. So this is basically showing you how much money we can get back for you after we redo your taxes.
Okay, yeah, because with truck drivers with taxes, we can deduct all of our expense, all of our meal expense.
Exactly.
As far as the house is concerned, we send them about $400 a month.
All right, so plus another $400.
Mm-hmm.
All right, so that's $1,049. That sounds about right.
Mm-hmm.
Now, y'all truck drivers out there, pay attention. $1,049. All right. Now your travel expenses. Now, when I say travel expenses, we're talking about, and this is real big for truck drivers. We're not just talking about hotels or whatever. We're talking about your fuel, because that's part of your travel expenses, is it not?
Yes, it is. I go to the hotel. At least we try to go to the hotel at least once a week.
All right. And you spend about what on the hotel?
About $77 a night.
So $77 a night, and you do it at least once a week. So that's 77. Mm-hmm. So that's 77 times 4.33.
Mm-hmm.
So that's what it is on that. Now, your fuel. This is the big one. Because them trucks don't get but 5.56 miles to the gallon.
Okay.
All right.
Okay, so we do have discounts for Prime, but when I notice when I go fill up, per fill up, it's about I normally fill up about $270 probably twice a week, 2 or 3 times a week, depending on when I need to. I say about 3 times.
Like I said,
yeah.
It's about 3. It takes you you run about 3
loads
a week.
Yeah, 3 loads. Yeah,
and I know you
3 to 4 loads a week.
Yeah, I know you spend at least 270, between 250 and 300 on the low.
Yeah,
Okay?
exactly.
So let's just say 270. So y'all remember, hold on, let me get my pen out. My thing got hit so I can write this stuff down. Y'all remember that my pen. All right, y'all remember that 333 to 1. Okay, y'all remember that 333 to 1. So we're looking at we're looking at 270 times 3, $810 a week. It's actually probably more than that, but we're gonna go with that times 4.33. Because I know on few when I was an owner operator, I was spending somewhere close to about $1,400 a week on. Because I was doing that peanut run from Bainbridge, Georgia to Chicago, and back from Chicago back down to Bainbridge, Georgia. I would run 3 loads up. Sometimes I run 2 loads up, 3 loads back down. Sometimes I run 3 loads up, 2 loads back down. But I was running 5 loads per week on that. And I was better than about $1,400 a week in fuel. So that right there is going to give you $3,000, and then that plus that what? What was the other number I needed?
The 333 something?
Yeah.
0.41.
41. Okay. That plus 333.41. 38.47 to 1. 38.47 to 1. 38.47 to 1. 38.47 to 1. 0.71. But that fuel was a big one for truck drivers. $46,088 in for fuel deductions. Did I do that right? Hold on, make sure I did that right. I did that. Did that multiply that times 4.33? Yeah, I did. 77. No, hold up here. 810, 4.33. Yeah, I did that right. All right. So we did that right. All right. Now we got health insurance. What are your monthly premium on your insurance?
No, I didn't take the health insurance.
Okay. All right. So you don't do health insurance, but all right, we'll leave that out since you don't do health insurance. And what do you do when you get sick?
If I get sick, I just go to the doctor. Just make an appointment.
Right.
Usually it's doctor on the go or something like that.
Yeah. Now, what does it normally cost you to go to the doctor?
That could be between anywhere between $250 to probably up to about $550.
Exactly.
Depends.
So you're paying health insurance whether you have it or not. See, that's the thing about that's the thing about health insurance. A lot of people say, "Well, I don't do health insurance." Yeah, you do. You get sick, you don't just sit behind there and cry. You get up and go somewhere, right? You go to the drugstore or something. You go to a doctor. You go to the patient first. You go to the emergency room. You might say you don't do health insurance, but you pay health insurance some kind of way. Okay, because as sure as you get sick, you don't just sit your behind there and cry. you gotta get up and go get something done. So we're gonna say about $300 a month for health insurance. All right.
Yeah, that doctor on the go is pretty good, and there's another one too that's really good. They'll send you the prescriptions and all that stuff.
All right, cool. And how many children do you have between the age of 7 and 17?
2.
But you get $10,000 that's right there. All right. So that's giving you a total of $169,663.84 on your deductions. You're in the 18% tax bracket. Let's calculate that bad boy right now. Let's see how much money you get back in your instant pay raise. Let me give you what's your first name?
Tawanda. Oh, you forgot about the lease. The lease. Do you want to do the truck lease?
Hold up. Yeah, let's go back here. Let's go back. Let's go to these travel and business expenses. Okay. How much is the lease?
Oh, this is gonna be a big one. It's about $1,200 a month. $1,200 a week.
$1,200 a week? Oh my Lord!
That includes the Navigo, the Qualcomm.
I understand, but look, but when you get your prime reserve account, you know you ain't got no business doing that, right?
Right, I know.
I mean, after about a year or two, you should have enough money in your private reserve account. You can borrow money from yourself, go buy you a truck, right?
Right.
And negotiate your own repayment terms, but really you have the title to that truck.
Right. I'm working on the business business credit now.
Okay, yeah, good. Because look, you need to dump that $1,200 a week thing. Now, and look, and that's not uncommon because I told y'all that there are people out there who pay $900 a week for a truck. That's buying one. Now this is a lease, but there are people out there who buy trucks who pay $700, $900 a week. Y'all know I'm not lying. You know, but that private reserve account, you ain't got to roll like that. All right, hold on. So that's $1,200 a week. That times, boy, $5,196. That's the cost of just having the truck, y'all. That's the cost of business. But this is what truck drivers do, y'all. Okay, so that's plus 384071. All right, so we gotta go back and add that 384071 to that, plus 30. What was it? 304. What was it? Shoot, I gotta keep me.
3840.
3840. 3840. 3840. 3840. 3840.
3841.
3840. 3840.71. So now it's 9,036, 9036, 9036, 9036, 9036, 9036, 9036, 9036.41, right?
0.71.
Oh, 0.71. Let me get it right. $108,440. All right, so woo! Look at them deductions. You get to deduct $232,015.84. All right. First name is Tawana.
Yes, I'm here.
All right. I'm gonna put I'm just gonna put something in there. Phone number.
Okay. You want me to put anything?
Yeah, just give me something.
770-882-6812.
All right. An email address. I don't about used all mine.
TAWANDA.
You say TAW?
Yes, T is in Tom. TAWANDA, the number 6 at MSN.com.
All right, then we submit. Woo, 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 wee. So monthly, you can get back in your monthly check $3,480.24.
So how would that work for owner operators though? Because we don't we don't get taxes taken out. So that would be towards the end of the year when we file our taxes, right? Okay.
Yeah, but look though. You can structure this, right, to where you can increase your monthly like that. I mean, yes, you're an owner operator. Now, as an owner operator, you're gonna get that back. You're gonna get that back every year. So that's showing you when you're gonna get back.
Yeah.
You're gonna get back. No, you're gonna get this back every year. Because it's gonna calculate what the monthly is, but what you get back every year based on what we put in here is gonna be $41,762.85.
Okay, so that's the 3480 times 12.
Yeah, this right here.
Okay, all right.
That's your annual savings, which is your annual money that's coming back to you.
Oh yeah, that's wonderful then.
Yeah. Now think about if you were a company driver, because company drivers still drive, on some of these same miles. They may not have this expense right here, right? They may not have this big of expense right here on your, for the truck, because they're not paying anything for their truck. but there's still going to be somewhere in the neighborhood of $3,000 going back into their check every month. At least an extra $2,800 to $3,000 to $3,100 is going back in their check every month. Do you know how many company drivers out there can use an extra $3,100 in your check every month?
Right.
You see what I'm saying? Now, here's what your financial experts do for you. Once they find out how much money they can get you back going into your pocket, because this is money that you're normally not missing, right? Because you operated without it anyway. So they show you how you got it back. Now, if you are a company driver, you're getting this back every month, right? That's how much your check has been increased by. So now you can, instead of taking that money and putting it in your pocket and blowing it on whatever you're blowing it on, why not take that money, right? Because your financial experts that you're getting, that you're only paying what, $79.97 per month for, they're going to show you how to take that same money that they just got you back every week and how to put that in your private reserve account. Can you imagine that much money going into your private reserve account every week? Every month? And how fast your private reserve account is growing? Because your private reserve account does not lose money like y'all's rest of y'all's bank accounts and savings accounts and money market accounts and even your 401ks. Because your private reserve account is gaining money every day and it's not going down because it's not tied to the market losses, it's only tied to the market gains. Y'all starting to see how wealthy people make money now? Are y'all starting to see how wealthy people keep getting wealthier?
Yeah.
Okay? Now, as I said before, now this is something that each and every last one of you all can do now. Why? Because of MWR Financial, right? MWR Financial, let's go back over here to my thing here, to the membership. MWR Financial is going to help you out on getting that money back. That's the first thing that your team of financial expert is going to do. But that's not all. They're also going to work on your credit. All you got to do, the first thing you got to do is send them your last 2 paycheck stubs or send them your last 2 years W-2. I mean, your last 2 years tax return. They'll do the work and work on restructuring your W-4s, all your deductions, all your taxes. They'll restructure and lower your tax liability, thus getting you more money back and having you to pay less money out in taxes, right? So you can be like Donald Trump, make good money, don't pay no money in taxes. You can be like Bill, make trillions of dollars, but pay zero in taxes, right? Right?
Calvin, can I ask you a question right there?
Yeah.
What if you paid taxes for the last 2 years, but for this year, you start your own business? How would that work?
They would go back and redo your taxes and get you that money that you overpaid.
Okay. All right, got you.
That's what the rich do. Because look, they're going to say, okay, well, you didn't know no better. You made that mistake. But guess what? We're going to help you get that money back. So they're going to go back and they're going to do what's called, what do they call it? A revision of your taxes, of your tax returns. Because you can go back and you can revise how many years of your past tax returns. Does anybody know the answer to that? 5. 5. You can go back 5 years and redo your taxes from 5 years ago, and you can do it up to where you're getting more money back. Uncle Sam has to send you that money. So your financial experts, they'll do that for you too. They'll go back 5 years and redo all your taxes and do a revision to all your taxes you filed for the last 5 years and get you that money back. Now, how many of y'all think if you had a financial expert that went back 5 years and redid all your taxes, how many of y'all think y'all would get a pretty good lump sum based on what you've learned here today?
25%.
Everyone.
Well,
Oh, yeah.
For a lot of y'all, that's going to be like winning the lottery. The fantasy 5. You know what I'm saying? 5 years? redo your taxes and then give you the money back that you overpaid. Oh man, some of y'all gonna be like, oh, I just hit the lottery. All right. Now, if that was all that this was, that $79.97 would be worth it. But that's not all that they do for you. Because remember, they're your financial experts. Just like the wealthy have their financial experts, you now can have yours for $79.97 a month. Right? The next thing they're gonna do is they're gonna work on improving your credit, baby. Right? Everybody can stand to have their credit improved. And you ain't even got to do the work. All you got to do is send them your send them your 3 credit reports, your TRW, your Equifax, and your TransUnion. Send them a copy of your credit report, and they go to work. Let me tell you something. They're going to start contacting all your creditors. They're going to start making them provide the proof of all the stuff, because a lot of your creditors don't have the proof that you owe them that money. Right? They may have had it 10, 12 years ago, but a lot of the stuff that they say that, they'll tell you that you owe it, and you might even owe it, but they still got to provide proof that you owe it, right? That's one part of it. And if they can't provide the sufficient proof, then guess what? It's got to come off, baby. A lot of you have stuff on your credit that should have been taken off, but it's still lingering around. If you had a repossession that's more than 7 years old, it's supposed to come off, but it's still hanging around there. Right? Stuff like that's got to come off, baby. A lot of you have medical expenses that cause stuff to go on your credit. A lot of your judgments and your stuff that's on your credit is from medical expenses. All medical expenses can be taken off. Got to come off, baby. So there's a lot of things that can be going on with your credit. It's just through procedural stuff, and it has to come off. And even the stuff that's legitimate, if they can't provide proof for it, guess what? That's got to come off too. Now, nobody can take off a legitimate something that someone can provide proof that you legitimately owe them for. Like if you got your car repossessed yesterday, you can't go and say, well, I'm gonna get them to take that off. Can't nobody do that. You can't weasel out of something you actually owe. Right? But they still got to provide proof of it. Now, for some reason, they can't provide all the proof. It's got to come off. So they're going to go to work on your credit, and you're going to be getting these alerts, on your credit bureau. If you have something, if you've already got something like Credit Karma or credit, stuff to your bank, you all get stuff that comes to your phone that tells you when your credit score goes up or goes down, right? If not, you can opt to get their credit thing, which is called what? What's the credit thing called?
Smart credit.
Credit wise.
Yeah, you can opt in for what they call smart credit, where they do credit monitoring, they do identity theft, they do credit restoration. It's all of it wound into one, and that's only like an extra $19 a month. Now you don't necessarily have to do that. Now if you already got stuff like Credit Karma, or you get credit reports through your bank or anything like that, you don't need that. Let them go to work for you to improve your credit, and when your credit goes up, you got to know it anyway. And their job, what they're concentrating on, is trying to move your credit from 50 to 150 points. Now, we've had some people on there that have gotten their credit moved up 200, 250 points. All right? So they're going to work on your money. They're going to work on your credit. Then they're going to work on your equity. Right? You're going to schedule, you're going to send them, all your, all your bills, all your debt, and everything you got, your mortgage, your credit card debt, your student loan debt, everything you pay it out, right? You're gonna send them all your debts. You're gonna let them know about all your debts, right? Then you're gonna let them know how much money you got coming in, right? Then they're gonna structure it to where they can get all your debt paid off, so you can be debt free. So you can get your debt-free date, right? Mr. Victor Agar, who's not here today, he's on the way to Houston right now. He caught a flight to Houston this morning, but he got his debt-free date, and it's December of 2022. That's next year, y'all. Next year, this man will be debt-free. Oh, nobody, nothing, zero. And they're gonna have what they call Wealth Max. Now, Wealth Max, that's that kicker. That's the one that gets you set up with your private reserve bank account. And something called land banking. I don't even want to, ooh, Lord have mercy, Jesus. I don't even want to go into that land banking. All right. But this is where they set you up with your private reserve account. Because they found out how much money they can get back for you each and every month. They raise your credit score, so your mortgage is now less, so you got more money that you can put towards your private reserve bank account there. Your insurance on your cars are less, so you got more money, or your truck, or your semi, all that stuff is now less because your credit got better. Now you got more money you can put towards your private reserve account. Your insurance on your health insurance, everything you got that you're paying on that is based on your credit is gonna go down. Why? Because your credit scores went up. So now, and they're showing you the money you save by getting out of debt, right? So they got all that stuff done, and they can show you, well, you got this much money now that you can take to move over to what? Your private reserve account. Or a lot of you truck drivers who have that 401k, there we go, back full circle. We talked about the 401k and what it can do for you. Now you know what this private reserve bank can do for you. So you tell me which is better, the 401k or the private reserve account?
Private.
Exactly. So why in the world would you keep your money in a 401k when it ain't doing for you a tenth of what that private reserve account can do for you? So the best thing you can do is to move your money from your 401k over into your private reserve account, and they can give you your millionaire date, which is going to be a lot closer than the date you would have had for your couple $100,000 date with your 401k. Did y'all hear what I just said?
Yes,
all those people over there with Swift, they got that 401k. We already shown you where the average Swift 401k account has about $11,900 in it. If they take that $11,900 and move it over to a private reserve account, their Swift 401k account at the end of 15, 10, 15, 20 years, whatever it is, by the time they retire, it's only going to be about a couple $100,000, right? But that private reserve account, anybody want to talk to me about what that private reserve account most likely is going to be? Millions. That's how you go from being where you at to being a bona fide real millionaire using a private reserve account. So which is better, 401k or private reserve? 401k or private reserve? There is no comparison, y'all. Matter of fact, let's go over here and let's look at what we got on YouTube. Husky Israel says, hello, brother. I'm new to your channel. Do you have anything that I can read or purchase pertaining to this info? Husky, I'm going to send you our link to the MWR Financial, and it's got a lot of reading material on there, and you can read up on it. You can Google private reserve account, but no one else can offer the private reserve account to you without you having to put in $1 million, $500,000, $250,000. Only MWR Financial can makes it available to everyday ordinary people. Okay, so but I will shoot this over to you. All right. Let me shoot this over to him on the membership. There we go. I'm gonna shoot you this, and I'm gonna shoot you my phone number where you can give me a call, and we can talk. If you want to know more about it, we can talk. And I can invite you. I can invite everybody who listens to my voice. I'm gonna send out an invite for you all to come in on a Monday, a Monday night webinar. There's a Monday night webinar that's going to talk about all of this. Okay, so I'll send you all that too. Give me a moment here. Let me get this back over to him real quick. Hold up. This is at. Get this back over to him. There you have it, brother. All right. Let's go over to our Facebook Live and see what we got on Facebook. I know we probably got some people over on LinkedIn asking questions. Let's check in on LinkedIn. Okay, on LinkedIn. Hold up. Where's my live broadcast? We're sending some stuff over to LinkedIn. There we go, right there, right there. There we go, right there. Okay, no comments on LinkedIn right now. Let's go find our Facebook Live. All right, let's go find our Facebook Live. Check out questions. What we got over here. Confirm. See if we got anybody that's asking any questions about posting convertibles, development center, millionaires in the making, millionaires in the making. Welcome to the first. Welcome. Got some people that's liking stuff. Questions. Like you shared, Mr. Roscoe. Absolutely love my MWR Financial. Great way to go, Mr. Hicks. I'm glad you love it. Mr. Hicks said he loves his MWR Financial. I love mine too, man. If money wasn't an issue, where would you try? Okay, that's what I'm talking about. All right. Let me check my phone because I just got some bings on here. See what we got going on over here. Okay. Some people have gone on and looked at that private reserve account. We've had some people have gone over and did the instant pay raise challenge. We got about 3 people that have done that. All right. So, all right. Look, everybody. I mean, it has become perfectly clear that the private reserve account, okay, is much better than the hold on here, than the 401k. Okay. So for all you company drivers, all you non-operators, whatever you're doing, if you're putting your money in the bank, it's not doing you, that's not the place for your money. Okay. Not in a regular bank account. It needs to be in a private reserve account. Okay. Now you can't get a private reserve account with your bank because you don't make enough money. You don't have enough money. You're not on their affluent scale. All right. Because remember, that's the reason why you all have never heard of this, because it was never meant for you all traditionally, in the past. In the past, it was only made available to wealthy people. And I'm talking about like real wealthy people, not even my kind of wealth. I'm talking about people that's above my kind of wealth. I'm talking about like wealthy people. Because I went to my bank and they told me, so, well, Mr. Butler, you meet this wealthy, but don't meet this second, third, fourth, and fifth. That's how, what's the word I'm looking for? Snobbish? Does that seem to be an appropriate term? Anybody? Is that too strong of a term?
Indigent.
Yeah, that's how snobbish they are about it. That if you don't have $1 million to pump into it, if you don't have $1 million in their bank, if you don't have, if you're not making $500,000 a year, if you're not depositing at least $50,000 to $100,000 every quarter, no, don't come talk to us about a private reserve account, man. You can't have that. That ain't for you. That's why you all have not heard about it. Because it is real. It is real. Unlike the gentleman on YouTube who thought that we was, talking about some type of scam because he had never heard about it. It was too good. In his mind, that's too good to be true. There's no way such a product can exist and the rest of us not know about it. Well, the rest of you don't know about it because you wasn't privileged enough to know about it. And that's how becoming wealthy happened in the past. But now, wealth is a choice. Because each and every last one of you, everybody in the sound of my voice, has now gotten the knowledge. Not only have you gotten the knowledge, you now know where you need to go to where you can get it and afford it. Right? Right?
Yes, sir.
Right.
Right. I mean, if there's a truck driver listening to this and you got 401k, man, you need to be on our page right now trying to call up everybody who is a business owner with MWR Financial Team Assurance USA. I mean, yeah, you do. You all need to be on here. All of you all who are Assurance USA, MWR, our financial business owners, you all go on this post right now and start posting your information, post your number, post your phone number, post your website link, just post it. Just post it. All right? Everybody go to Facebook right now on this broadcast and start posting your stuff right underneath this broadcast and let people know where they can get in touch with you. Okay? Every last one of you.
Yes, sir. Okay.
Because people who are listening, they need this. God knows they need this. Not only do they need it, if you all are listening to this right now, you need to call everybody you know that you know need this and let them know about this. Because wealthy people have been doing this for decades. That's why they are getting wealthier and wealthier and wealthier and wealthier. That's why that divide between the wealthy and everybody else is getting bigger, bigger, and bigger. Because they knew something you did not know. They had access to something you did not have access to. They were privileged to something that you wasn't privileged to. But now you are. Now you are. There's no reason for you to keep struggling, trying to make ends meet. We can put something in place that's going to help create wealth for you. And not just wealth for you, but what type of wealth, everybody? Generational wealth. Because here's that thing about that private reserve account that I didn't get to yet. And if you go back and watch that on that video I did, outside there, you'll hear about it. Let's say after, 10, 15, 20 years, you've been pumping money in your private reserve account. You done bought yourself several cars, paid for. You done bought yourself a couple of homes, paid for and everything, and you still got your money in your private reserve account. Because your private reserve account don't drop when you borrow money from it. No, don't do that. Don't do that. Okay, that's y'all bank account drop. When you take money out of it. The private reserve account don't drop. It stays where it's at and keeps going up. It keeps on making money. Okay, so you now pump money into your private reserve account instead of pumping all your money into your 401k. You pump that money into the private reserve account instead of 401k, and now your private reserve account after 15, Lord have mercy, 10, 15, 20 years, your private reserve account now is in the tens of millions of dollars. It's up there. It's up there. Why? Because you got that kind of, your account roll like that, right? So now you got serious money in your private reserve account, right? Let's say you want to retire. Let's say if some of you truck drivers out there, or just some of the, just people out there, anybody can do this. Not just for truck drivers. Now I don't want anybody to think that, well, that's just for, no, it's not just for truck drivers. Anybody out there who has a bank account, anybody out there who has money that's coming in, anybody out there who is wasting money right now, you can get a private reserve account. It's only going to cost you $79.97 per month to sign up with MWR Financial and get your own team of financial experts so you can make this happen. And they're going to do all the work for you. That's all it's going to cost you, man. But for the sake of what we're talking about right now, any of you truck drivers out there that have a 401k, you need to be looking into moving your 401k over to an MWR Financial Private Reserve account. If you're out there right now and you're a truck driver, you're making decent money, you need to be putting a good portion of that money over into a private reserve account. Because unlike your 401k, unlike your IRA, unlike your money market account, unlike your annuity account, unlike your savings account, and unlike your regular old checking account, your private reserve account, money is going to grow every single day, and it's going to yield you a higher return, and you have zero risk of losing it. Why? Because your money can only make money. It cannot go down with the market. It only goes up with the market gains. And because of that, if you're doing what you're doing with your 401k, putting it in for your retirement or your nest egg will be 10 times larger with the private reserve account than it ever going to be with that 401k account. And that 401k account, there's a chance you could lose your money. There's zero chance you can lose your money with the private reserve account. And let's say you are 20-some years old or 30-some years old and you want to retire in 10 years. Earlier than you thought. Let's say at 45, you're 20 years old, at 40, you want to retire. Or you're 40 right now, and at 50, you want to retire. Or you're 50 right now, and 57 or 60, you want to retire. Whatever you're at, you want to retire. Let's say you retire, and you say, well, self, I want to set myself up for retirement. I want to pay myself $100,000 a year for my retirement. That's pretty nice retirement, right, y'all? $100,000 a year? What y'all think? Right? That's pretty nice retirement, right? All right. So you say to yourself, I want to borrow $100,000 a year from myself, from my private reserve account, because I got that money in there like that now, right? I've been pumping money in my private reserve account. I got at least 1.5 million, 2 million, 3, 4, 5, 6, 7, 8, 9, 10 million, whatever it is. Right? You say to yourself, I want to borrow $100,000 a year. So you borrow $100,000 a year. Our reserve account balance go down? Anybody? Does your private reserve account balance go down?
No.
It keeps on riding. The market's going up, baby. I mean, don't even take that hit like that, like your 401k would, or your bank account, or your savings account would. That private reserve account don't take that hit like that. It still stays at the same balance and keeps going up, making more money. All right. So you borrowed $100,000 from yourself, right? So $100,000, if you borrowing that from yourself, that's what? That's $8,333 a month, right? Right? Everybody agree to that, right? So you decide to pay yourself back. You set your own terms of paying yourself back. You decide, well, I'm going to pay myself back at $300, $400 a month. Now, if you could get $8,300 a month and pay back $400 a month, would you do that deal all day long? Huh? Would you do that deal every day and twice on Sundays?
Yes, sir.
Yes, sir. Right?
Yes, sir.
You borrow that much from yourself, but you pay yourself back this much right here. Let's say $430. So you living on $7,903 per month. That's pretty good retirement, right? That's pretty good retirement. And hold up, we not done. And you are collecting the interest on the $430. The $433 you're paying it back yourself. You set your interest, you want to set yourself a higher interest rate, you can set your interest rate at whatever you want to. Why? Because it's yourself, right? It's your bank, it's your money. You borrow from yourself, right? Well, self, I want to charge myself some interest on that $433. I want to charge myself times. I'm going to charge myself 6.5%. So myself, I'm paying an extra $28 and 15 cents per month on my $430 plus $433. I'm gonna pay myself back. So it's that right there. But that extra $28, so I'm collecting that because why? Because I get to collect the interest on the money I'm paying back to myself, right? Right? $28.15. That's the interest you're collecting on paying yourself back. $28.15. You're paying yourself back $337 a year. That's interest that you're collecting on paying yourself back. Better than paying to somebody else. And you still bringing in what? You know, your 79 or whatever you're paying yourself per month. Now, get this. Let's say you live to be 100 years old. You live to be 100 years old, ripe old age, 100 years old, because you ain't got no worries. You ain't worried about nothing. You ain't worried about your money. Right? You ain't worried about how you're going to pay for anything. You got nice cars outside, paid for. You got a nice house, probably a couple of nice homes. You're taking vacations anytime you want to. You know, I mean, you ain't got no worries. So you ain't got no stress. So you probably live longer. Right? You spend your time working out like what I need to start doing, working out now. Because I need to get back in shape so I can live longer. Right? So let's say you live to be 100. Okay? If you live to be 100, your money, you still ain't lost no money. And you've been collecting $100,000 a year from your own private reserve bank account, and your private reserve bank account is still been growing, and you've been collecting money, living out your retirement, and then when you pass on, what happens, everybody? What happens when you pass on? What happens to that money that's in your private reserve account when you pass on?
Transfer to the next generation.
Transfers to the next generation. There's that generational wealth that everybody talks about. Everybody talks about generational wealth, but nobody's willing to tell you how to create it. Well, guess what? We just told you how to create it. You got a group after group on Facebook. Generational wealth this, generational wealth that. But ain't none of them tell you how to create generational wealth. They're talking about it, right? Everybody say they want it. Everybody say we need it. But ain't nobody providing a way to get it until now, right? We just sat here and showed you all proof positive. No hearsay, no none of this where I heard, no none of this where I read. We just showed you all proof positive how each and every person can become wealthy because it is a choice. And y'all can't tell me, none of y'all tell me you can't afford $79.97 a month. I don't want to hear that crap about, well, you know, times are kind of tight. Brother, you don't know tight times. I know tight times. Now, you want to talk about being tight? Let's talk about being homeless. Okay? If you want to talk about being tight, let's talk about being homeless. Because I can show you some tight times now. I can show you some some real tight times. For those of you who don't know, this was me 2 years ago.
All right, here's the deal. My name is Calvin Butler. I live here in Tallahassee, Florida, and I'm currently homeless. Now, I've seen all kind of stuff on the web where people say they're getting rich on the web with internet services, with websites, with AdSense, with all types of stuff.
Now look, that was me approximately 10 years ago. Okay, and this is a whole series right here that you all are looking at called Diaries of a Homeless Entrepreneur. I started filming the day I became homeless, May 1st, 2008. That's the day that I became homeless. And I was homeless for 18 months. And the day I became homeless, I started filming and letting people know that I was going to start my business from the homeless shelter, and I was going to do what I can to get myself out of that situation. And I've been filming ever since. All right. Now, if you want to know hard times So don't tell me you can't come up with $79.97 to make yourself wealthy. $79.97 to secure your retirement. $79.97 to make sure you don't never have to worry about money again. $79.99 a month and 97 cents a month to make sure that your family, your children, their children's children, and everybody in the following generation will enjoy wealth. Because if you tell me that, I ain't got no sympathy for you. If you tell me you on tight time, I'm gonna look at you and laugh because you don't know tight time. Tight times is having to get up on a Saturday morning and a Sunday morning, go down to the local church and sit in a 2 to 3 hour service just so you can get breakfast. That's hard times. Hard times is getting up at 4 o'clock in the morning, walking to the labor hall, sitting there, waiting for them to call your name, hoping you would get out on a minimum wage job to go dig some ditches. That's hard times. So please don't talk to me about hard times. Don't even fix your mouth to tell me, well, money is tight. No, it ain't. No. You don't know what tight is. If I found a way to do what I needed to do to get myself out of that situation, think about the situation you are in right now with a roof over your head, with a car to drive, with food in your refrigerator. Now, if I can do it from there, to get to here where I am now, imagine what you can do in the shorter time that you can do it, especially now knowing about private reserve banking and MWR Financial. All right, everybody. This seems like a good place to leave this on. It is, well, I'll be timing this just right. It is 1:10. I've got pretty good at this timing thing, right, everybody? It's 1:10. We said we wrap up at 1:15 and we're right on time. I promised my wife I'll be done by 1:15 because I got to spend some time with my wife. I do have a family, all right? With that being said, look, everybody, look, let's be serious here, all right? Everybody is thinking about politics right now and the fate of the country. And, let's talk real serious here real quick. I mean, let's be real serious now. Let's be real serious. All indication is that, Joe Biden, Kamala Harris is going to be our next president and vice president. Okay, that's a foregone conclusion.
It's official. They already announced it. Yeah.
All right, so it's official. We all know that. Now there are some things that we know that have happened and that are going to happen. All right. We all know that President Biden and Vice President Kamala Harris, they owe the African American community a huge thank you. We know that. Okay. Georgia, which went over to Georgia hadn't voted Democratic since Jimmy Carter, but we won Georgia. Why did we win it? Atlanta. Why did Atlanta win it? Hey, that's where all the black people at. Let's be honest. Let's be real. Arizona, where do we win that at? Phoenix and areas where there's high population of black people. And John McCain people, because President Trump, he talked about that man like a dog. He gave him no respect. John McCain right now is probably smiling somewhere saying, I told you I'd get you back. Right? John McCain, he was the senator from Arizona. All right? Look at Philadelphia, right? In Pennsylvania. Why did we win there? Philly. Come on, people. Let's be real. They owe us a debt of gratitude. They owe the African American community a debt of gratitude. Now, here's the real question. Someone asked a while back, a couple of days ago, now that we've helped them to be put in this position, what should we expect from them? Now, that's the question that I want to address. Okay, what should we expect from them? Well, we can expect a lot of things, but that don't mean that we're gonna get it. Why? Because people in power, in order for people in power to hear your voice, in order for people in power to act upon your needs and your wants, in order for them to address your needs and your want, your voice has to have value. You understand what I'm saying? The African American vote is a very powerful vote, but the African American voice does not have value because African Americans are on the lowest pole when it comes to what? Community wealth. Right? Right? As a community, as a people, as a community, as a constituent, we have less wealth than anybody. Do y'all agree with that?
That's true.
Y'all agree with that? So who gonna listen to us? It doesn't matter that we help you get the vote. It doesn't matter that our vote is the vote that makes you successful. It doesn't matter that you need our vote. What matters is once you get in, can you hear our voice? And if your voice does not have that value behind it, they ain't gonna hear you. Let's be real about that now. Let's be real about it. They don't hear us because it don't have the value in it. White America has the most value. That's why white America gets the most stuff done for them in Congress. Right? Asian Americans, they have more value. That's why they get more stuff done in Congress. When they look at most of the new businesses and stuff that start up. Who that started by, y'all? Y'all talk to me. Let's be real. Let's be real. Most of the grants, most of the stuff that all the government grants and all the government, the incentives, housing, business, all that stuff. Where does it go? Where does it go, everybody? The stuff that really matters. Now, we're not talking about, the stuff that don't really make a whole lot of hill of beans. We're not talking about project housing. We're not talking about food stamps. We're not talking about government subsidies like that. We're talking about the real stuff. Where does it go? It goes to those that has the most value, the voice that has the most value. Because they only hear the voices that have the most value. So if we want our voices heard, we got to what? Up our value. Right? Right?
Right. And we also got to work on our social capital.
Exactly. Exactly. We need to understand this, and I know y'all hear me, and I know y'all know what I'm talking about, cause I'm online. Woo, the 15 hours that I'm up, I'm online about 10 of those hours. Okay, and I see the conversations in the trucking groups. I see the conversations in the wealth groups. I see the conversations in the Black entrepreneurs groups. I see the conversations all over, not just Facebook, but LinkedIn, Twitter, Instagram. I see them everywhere. And we're all having a conversation, but ain't nobody providing you with the answers to how to gain wealth. Now you have the answer. The only question is, are you gonna act on it? Because $79.97, come on, man. I mean, that ain't nothing. That ain't nothing. MWR has made it possible. MWR Financial and Cal, these two companies right here have made it possible for the everyday average American, even African Americans, to become wealthy. And not just you, but we're talking about generational wealth. The kind of wealth that really matters. We're not on here just talking some, I know there's a lot of BS on Facebook. There's a lot of conversations about stuff that ain't gonna make no never mind to nobody. But this right here, this is the type of conversation we should have been having in our school, type of conversation we should have been having around our breakfast table and dinner table, type of conversation we should have been having in our churches, the type of conversation we should have been having in our communities, the type of conversation we should have been having a long time ago. These are the conversations we should be having on social media. Instead of all that, blah, 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 yin yang talk, that don't mean nothing to me. All that stuff about, whatever it is they talk about on Facebook, that it don't mean a hill of beans. But this right here can take you from where you at and put you in the column of truly wealthy. And don't you sit there and dare ask me how I know, because you know how I know. You know how I know. A lot of you living here in Tallahassee, y'all saw me walking around with my laptop. You know, I was skinny as what? Snag or two. I couldn't even afford my dentures. I still don't put my bottom dentures in because they're a little too tight. You know, they hurt. But y'all remember me back then. Y'all remember me. And you don't go from that to where you see me at now without learning a little something and applying the same knowledge that we have dumped on you all right now. The same knowledge that took me 6-7 years to gain, you all have it in this little 2 hours that we've been on here. We've given you the knowledge. We've not only given you the knowledge, we've given you the means to make it happen for you. It's right there, and it's affordable. So,
amen.
That's all I got to say. That's all I got to say. All right, everybody. Again, I appreciate everybody for joining us. I mean, this has been a great show that we had today. This is the first of our new format. Okay, and y'all know before we were doing the 6 figures booking freight for home show, but we have advanced, beyond that. Okay, we have advanced beyond just making money booking freight. Okay, we are a third-party logistics firm, the Assurance USA Corporation, and our goal, our core products, everything that we do is to help owner-operators and people within the industry, freight brokers, dispatchers, shippers, all of you all, everybody gains from this knowledge. Even people who are not in the trucking industry, everybody who ever wanted to be wealthy, now you can. It's not a right, it's not a privilege, it's a choice. There's a choice that you got to make. With that being said, I appreciate every last one of you all. I will see you all back here next Saturday on our new format that we are calling, what are we calling our new format? I forgot what we're calling it. Wealth management for freight and logistics industry professionals. Okay, that's our new format. Thank you all. This is Calvin, member of the National Dispatchers Network, and from all of our members of the National Dispatchers Network, I appreciate you all joining us. I want to give a shout out to some of the Facebook groups that allowed us to be on today. All Truckers United, we're always grateful for you all. Every time I post something, you all approve it right away. Thank you all so much, because you all know that we're trying to put out positive stuff, and I thank you all so much. Any of you all who haven't joined All Truckers United, do so. There's a very nice group. They have about 60,000 members and growing. That's the place. If you want to hear trucking, you want to talk trucking, you want to talk positive trucking stuff, go to All Truckers United. We also want to thank freight broker trainers and dispatch trainers, instructors. Thank them for allowing us on. Millionaires in the Making in Tallahassee. We want to thank them. Appreciate you all allowing us to come on to your website today. We have some new places that allowed us to come on. Billionaires Mindset, Cash Flow TV, YouTube, thank you. LinkedIn, thank you. Twitter, thank you. Y'all have a blessed day. I'll see you all next week. And for the members of the National Dispatchers Network, I will see you all on Monday night. And we will be posting the link, the invite link to the webinar for MWR Financial in case anybody wants to learn more about what we do at MWR Financial and how you can get involved with MWR Financial either as a member and get your own team of financial experts for just $79.97 per month, or if you want to become a business owner inside of MWR Financial and promote their service. This is a great service to promote. This is a service that you all can be proud of. This is a service that is changing lives, literally. Thank you all. Thank you all. Thank you. And again, congratulations to Ms. Pompey on your promotion to senior director. Thanks again. Bye, everybody.
Thanks again. Couldn't have did it without my team. You're awesome. Thank you.
Oh, yeah. They are. All of you all are just awesome. All right, everybody. Talk to y'all.
All right.
Everybody have a good weekend.
Have a good weekend.
Thank you.
Bye, everybody. Bye, everybody.